Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina, Senior Market Strategist. Joining me live from the studio, our Senior Economist, Tracy Shuchart, also known as the Fabulous Shy. How are you, Shy?
Hey, good morning, everybody. We got a busy day.
We do. Did you see the list of guests and contributors today? It's off the hook on FOMC Wednesday.
I know. I'm very much looking forward to it.
For sure. Well, kind of lead us in. What happened overnight? Anything? I know we're anticipating FOMC today, and we've got big, beautiful bills, and we've got, bombs going off in the Middle East, unfortunately.
Right.
What's happening?
Right. So, kind of to catch up, yesterday we talked a little bit about it on hot commodities. We had Trump in the Situation Room. Rumor was they were deciding whether or not if the U.S. was going to get directly involved. Now, we had ended up having no official comments after that meeting. We do know that Trump did have a call with Netanyahu afterwards, and he also spoke to Pakistan, who expressed willingness to play a role as a mediator between the U.S. and Iran, although we still have no clue exactly what's going on with that. This morning, Iran's supreme leader said Israel made a huge mistake and will be punished for that as attacks still continued overnight. Then we had the former Iranian economy minister called for control over the Strait of Hormuz for 100 days. Now, we didn't really see a huge market reaction on that because we don't know whether kind of it was his opinion or if this is actually going to happen. But what he wrote on X was, starting tomorrow for 100 days, no oil tankers or LNG cargoes will be able to pass through the strait without Iran's approval. This policy is decisive if it is implemented, and I think that was why markets didn't react so much in a timely manner. Any delay in its implementation means enduring more war inside the country. Trump's battle must be ended with a combination of economy and security. So we will await to see if this does indeed happen. Obviously, we would likely see oil prices spike on that. And speaking of oil prices, so we have, if we go into some crude news, we have oil options more bullish than after Russia's invasion of Ukraine. We have bullish Brent calls on the back of huge spike in oil volatility. We also do have EIA crude oil inventories today. Yesterday, we saw a draw of just over 10 million barrels from the API report. We all know how I feel about the API report. It is more wrong often than not, but it's definitely something to keep an eye on. Moving over to some FOMC news. Obviously, there's pretty much no expectation that the Fed will reduce interest rates at this meeting. They're going to hold steady. The dot plot is going to be, therefore, very important, which kind of outlines where central banks think Fed funds rate is headed. And of course, Powell's press conference afterwards. Hopefully, this gives us a kind of clear idea on what the Fed is thinking. There is a fear kind of on Wall Street that Powell is going to maintain his hawkish tone, and that could be a trigger that sends equity prices tumbling. So this is kind of what Wall Street is talking about on all the headlines today. So far, traders continue to wager on just shy of 2/4 point interest rate cuts this year, with the move fully priced in for October. And the Fed officials had penciled in 2 cuts this year at their March projection. So even though they're going to hold rates steady, this meeting is still going to be very important.
Yeah, very interesting. Blue Putnam, who is the former economist of the CME Group, has been on the show from time to time in the past. He wrote a piece on LinkedIn suggesting, hey, you do a substitute for the way they calculate owner's equivalent rent in the CPI, and then you factor in that, we're two-thirds or higher service economy. Inflation's way lower in reality than what we think, and the spread between the Fed funds rate right now and that reality of where inflation really is too big. And he went so far as to suggest, well, I wouldn't be surprised if we have a cut in the is it the June or July meeting? I can't remember what the next one is. And I think a lot of economists are starting to think that as well. Is that something that Blue outliner, or is this other chatter that we're seeing collaborating that?
No, I have seen people talk about rent specifically and how it's adding to deflationary pressures. That said, we are seeing a softening in the labor market. We're going to have continuing claims and initial claims this morning, so we'll see what those numbers are going to be. It'll give us a better clue on the labor market. That said, even though we're seeing a softening in the labor market, inflation's probably maybe lower than it's coming out on the CPI. I don't think that. I think Powell's going to be hawkish, to be honest with you. I think it's going to be wait and see. He's going to reiterate that 1,000 times, like he did the last meeting last month. But we'll see. I mean, I think I still think the economy, at least on the outset, still looks strong enough that he's going to maintain his wait and see. Especially because we haven't really seen any sort of inflationary pressures from the tariffs yet. So we'll see.
Yeah, I got it. It's funny. In the old days, before the internet, when I was a young man, and it was a long time ago, we didn't know, if it was going to be a rate hike, a cut, how many basis points. You just didn't have the information, right? And now with the internet, you have all this information. And the weird thing about this meeting is now it's not like, what are they going to say in the statement? It's not like, well, are they going to cut or not? Those mysteries are kind of taken away, and everyone's now looking at that dot plot. Now, is that dot plot going to suggest what the median is? That median is going to be a 25 bip cut by the end of the year, or a 50 bip cut? And that's where we're at. I mean, we're down to that detail trying to speculate.
Pretty much. Exactly. So it will be interesting, definitely. And we have Michael Brown on this morning as a guest. He is the senior research strategist at Pepperstone. So I want to kind of get his view on exactly what he's thinking for FOMC.
Oh, absolutely. Yeah, I'm looking forward to talking with Michael. Also, later on the day, we have a special guest also. And this guy, 10 years from now, 15 years from now, his name is going to be mentioned with Jim Dalton, John Murphy, Steve Nissan, and that's Brian Shannon. So Brian Shannon is going to be here later this afternoon also. Looking forward to that as a special guest.
Brian's great. Fantastic. And then, of course, we have Tony Nash back with us for FOMC and his reaction afterwards.
Absolutely. So going back to crude oil really quick before we talk about any other economic releases today. It's funny. Yesterday's close in the front month, the WTI was the highest close since February 11th, 2000 this year. And that was, I got a chart. Look at that. We have a chart queued up. So this is a continuous chart, right? We have highs in April that we blew through. And then we hit, if you just kind of put your crosshair right on the close from yesterday, you just kind of train your eye all the way over there, and boom, you get this high up here. So to me, this is more than a retracement. This is maybe a longer term trend to this direction.
Yeah, and we've actually seen a shift in the crude curve in both Brent and WTI, that the curve is now entirely in backwardation. For a while there, we kind of had the first 6 months in backwardation, and then we kind of had like a hockey stick looking thing where it was in contango. So the curve has entirely shifted into backwardation.
Yeah, wow. Well, it's exciting times for sure. Let's hope cooler heads prevail, by the way. And we stop with the drones and the bombs and all that horrible stuff. Economic releases. I think you
100%
mentioned
agree.
economic releases. What else are we up against today, if anything important?
All right. So at 8:30, we have building permits, housing starts, jobless claims, continuing claims. At 10:30, we have crude inventories. Of course, 2 p.m., we have the FOMC interest rate decision. And 2:30, we have the presser.
All right, all right. So jobless claims, well, we'll see. You already mentioned it. Housing starts. I noticed that 30-year mortgage rate, I think it was from MBA this morning, or yeah, was still really, it's just stuck just south of that 7% average level. I think it was 6.84% this morning, and that's been sticky at that level for a very long period of time. I'm wondering if that's ever going to break.
Well, we'll have to see. We did have MBA mortgage applications out earlier today. It came in at minus 2.6. Prior was 12.5%. So looks like we've had a dip in mortgage applications.
Yeah, well, that makes sense. I wonder how much that is seasonal versus just high interest rates, and everyone's kind of waiting.
I think it's a combination of a lot of things. I mean, we have been seeing kind of a softening in the housing market as well. So we'll see if that continues. The Fed says they don't really care about the housing market, but you know, they do hold a lot of mortgage-backed securities. So
Yeah. Well, on that note, also, will we have any change in tapering in the statement also? So I always look at that as kind of a side
yeah,
consideration to think about that, especially in lieu of the big, beautiful bill and the Congressional Budget Office coming out today saying, or yesterday saying, yeah, this is not going to reduce the deficit.
at all. Well, and they threw in there $1 billion tax break for oil and gas companies. Kind of, they want to lower oil prices. Just take the loss. We'll give you a tax break. It'll all turn out in the wash. It'll be fine. So I have a hard time seeing that actually pass, but they threw it in there.
Yeah, and the estate tax too. That's the latest outcry. It's up to, I think it's 15 million for a single, 30 million the inheritance tax, that is, for a couple. Um, so I don't know. I don't think my parents have that much, so I'm not too worried.
Right?
Anyway,
So
the yeah. Go ahead.
yeah,
Go ahead, Shai.
lots to keep an eye on today. So busy day.
Yeah, and then the bonds took quite a bit also. We should mention this before we get Mike on. Bonds did catch a bid right now. That September 30-year is almost at a 114 handle. So there's finally kind of money flowing in. This trend's been subtle, but it's been going on since we hit that 110 handle low. I don't know, a couple weeks ago. So money is flowing into the longer end of the curve, and 10-year, of course, as well. So we'll check on yields a little bit later. The 10-year yield, the CME Group's 10-year yield, last print was 4.376. That's that CME futures yield. So we'll see if that trend continues as well. There's a lot of folks thinking it might be time now to get involved with fixed income.
Yeah, absolutely. Absolutely. And now I mentioned, in the metals complex, we do have platinum up almost 2% today. Silver's up and gold flat to negative.
Yeah. Wow. That's a big move. That's a big move for sure. All right. So, without further ado, let's go ahead and do a quick edge report and we'll get Mike in here. Well, we already started talking about crude oil, so let's continue on with our crude oil conversation right here. I have that April high highlighted. January 5th highs up here, 80 spot 04. Remember, back adjusted continuous chart. Stochastics, they're trying to cross under, but now they're trying to cross over. They don't know what they're doing. They're a little confused right now, just south of that 80 level. As well, and that's not surprising. Oopsie, what's going on here? Let's expand this here and look for some targets for crude oil traders. By the way, and it was great seeing Merritt actually trade some commodities yesterday, wasn't it? Great change. We have that Jax 3 level up here at 74 even would be a target for the bulls. We also have a blind spot too, just a little bit south of that at 73.90. A little bit higher, we have that call resistance level at 75 bucks as well, with R1 slightly above that is another target should we get more excitement in this market, which is very possible. Jax 1 at 72 even. We have blind spot 1 way down here. I love these blind spots. That's at 71.06. That's a Menthor Q secret sauce level. Love that. And then S1 is a little bit further below that at 70.90. Let's keep moving here. Let's go over to gold really quickly here. We're going to talk a lot about the even the S&P with Pharm in a minute. We will cover that in a second as well. But whoa, why is my fib line way over there? It's too far away. Anyway, it's not in play anyway. This rectangle here, area support and resistance got all muddled. We're really going sideways, walking along that 8 EMA. That's that orange line right now. Just kind of two baby candles in a row, two, not quite dojis, almost dojis, kind of symmetrical candles on the daily, suggesting maybe some price happiness, or at least, hey, let's wait to see what happens on Wednesday. And that's pricing around 3404. So that 3400 level has been sticky. Intraday, we do have some targets for the bulls. We have that Jax 3 up at 3410, which is right here. We traded through it earlier this morning before the initial balance in London in the UK. Speaking of the UK, good morning, Delhi, if you're listening. 3420, Jax 1 is right where my crosshairs is. There's also a blind spot right there, too, which is hot. We have that previous session's highs, 3422. R1 and call resistance for the 0 DTE complex, hovering around that 3425. For the bears, we can go down to the lower end of our chart and we can see a Jax 4 level at 33.90. We did wick through it once in overnight trading, but buyers pushed us all the way back up. S1 right now is tracking 33.86. Previous session's low is right below that at 33.84. And let's just pop over to the E-mini S&P really quickly. September contracts way in the lead on volume. 158,000 versus only 76,000 in the June. The roll is happening. Remember, we have that options expiration, and is it the quarterly options expiration as well? That's coming up. That's Friday. So this is going to go off the board. June's going to go off the board. Front month for sure at this point. Is September. I know Pharm likes to look at the June as well as the SPX at this part of the season, which makes sense as well. We have a really nice kind of, again, bull market here, man. I mean, we're just walking along that 8 EMA. That 8 exponential moving average is key to me on a daily chart. It's just arcing up ever so nicely along with the 21 and the 50, and we're just marching along it to the upside right now. A little bit of a pause here so far this morning. We'll see what happens. The stochastics is just kind of tangled in love right up there at that 80 handle as well. Going over to our intraday chart, we only have a 45 handle high to lows today. Yesterday's high to low was only 63 handles, so we're kind of tapering into wait and see mode, I think. With respect to the breadth anyway of some of the stock index futures, but we do have some targets here. VWAP has been interesting. This session VWAP, we tried to close it. We did close above it once, closed above it twice, although buyers were trying to test it, and then broke above it as well. So I'm going to keep my eye on that today. We do have this blind spot 3 again. Menthor Q, love these levels. 60, 62. Up above that, we have Jax 3 at 60.75 as a target for the bulls. R1 is a little bit further than that. It's 60.77. Beyond that, we do have that one-day max way up here, right by that Jax 2 at 61 even. On the downside, We have some targets as well. Jax 4 at 65.25, high vol at 60.20, and then we have that S1 level down here at 60.14 and a quarter. Lots of targets both ways. We'll see what happens today. That is today's Edge Report. All right, I think it's time for our special guest. We do have a special guest today. This special guest, let's get him in. Michael Brown, Senior Research Strategist at Pepperstone. Michael, good morning. How are you?
Morning to you guys from an incredibly warm city of London. I'm not doing too bad. How are you?
Doing great, man. Thanks for being with us today. We appreciate you taking the time to be with us. You know, I was talking to Tracy a little bit about you because I think she knows a little bit more, and I was like, "What? What's his focus? What could I ask him?" And she's like, you could ask him anything about any market, and he'll be good." So I'm going to start off with, we have this conflict going on in the Middle East. We have the big beautiful bill, the deficit, the Fed. But with respect to these geopolitical conflicts, how is that viewing the strength of the U.S. dollar versus the major currency pairs?
Yeah, I mean, it's a really interesting question. I think one thing that has sort of become clear over the last, well, week or so now, since the geopolitical tensions really flared up, is that the dollar has started to act a little bit more like a safe haven once again. There've been a lot of talk around how, the reserve status of the dollar was under threat and how investors were looking at potentially things like the yen and the Swissy as other places to seek shelter. But to coin a very British expression, when push came to shove and things really started to kick off, all anyone wanted to get hold of was the dollar, which really speaks to it having maintained that haven value. What I would say more broadly, though, is that actually, and perhaps surprisingly, markets have generally, apart from the crude complex, of course, markets have managed to largely shrug off geopolitical developments with relative ease. I think the lack of any significant escalation in the Middle East has given participants a bit of a degree of comfort to come back into some of the riskier areas, such as equities.
And, speaking of equities, I mean, we have seen this market, we had obviously the big tariff sell off in April, and then we have seen markets rebound rather quickly with not, we haven't really seen a big pullback in these markets. And what do you think is propelling this forward? I mean, even as you mentioned, we haven't really even seen geopolitical risk being thrown in to the mix much. Markets haven't reacted that poorly to that at all. We've had a couple of pullbacks, but nothing major.
Yeah, absolutely. I mean, I think it's clearly a market that wants to rally. The path of least resistance is quite obviously to the upside, and it has been for some time. I think there's probably, I would frame it as there being three sort of legs to the bull case at this point. The first is obviously you mentioned trade. We had that initial shock with the Liberation Day tariffs at the start of April, which were much bigger and more wide ranging than anyone had expected. We're well past that point of peak chaos, of peak uncertainty on the trade front now. And I know concrete progress is probably a lot slower than anyone would like, but the direction of travel is towards deals being done. It's towards calmer rhetoric and cooler heads starting to prevail. So that's certainly helped the market out. You've also got the fact that despite all of the ongoing economic uncertainty, earnings growth is still very, very solid indeed. And actually, that brings me on to my third point, which is that you can say the same for the underlying economy. I know we've got some data out at the bottom of the hour, but by and large, the US economy remains pretty resilient. So when you put those three things together, you've got a very potent mix for the market to move higher. And I think barring any major escalation in the Middle East, you've got to say that new highs are probably on the cards in the short term.
And speaking of resilient markets, there's a lot of fear that the Fed is going to be hawkish and this could send markets tumbling. What are your thoughts on the Fed today? What are you specifically watching for? And what kind of tone do you think that Powell is going to set today?
Yeah, I think the biggest area of interest for the FOMC later is going to be the updated dot plots. That we all know they're going to hold rates steady. I'm hardly sticking my neck on the line saying that. And the statement is going to be a copy and paste of what they issued last time out. And then, of course, in terms of the forecasts, well, we all know what tariffs are going to do. They're going to push inflation higher and growth lower in the short term. So that's not going to be a surprise. The big question is, what does the median dot for this year show? Is it 25 basis points of cuts, or is it 50 basis points of cuts? So that's where you've got the potential for a bit of a hawkish surprise, given that money markets are only discounting about 44 basis points of easing by the end of the year. But in terms of Powell himself, I don't really expect him to make waves at the press conference. He's got this very familiar script now that policy is in a good place. They don't need to be in a hurry to make any adjustments. They're happy to wait for more clarity, and they're not going to listen to what President Trump is saying in terms of delivering a 100 basis point cut. And I think he's just going to repeat that rhetoric ad nauseum at the presser later.
Michael, is there any chance we're going to have any deviation for the tapering, quantitative tightening in this round?
I'd be very surprised if we did. I think it was back in March, if I remember rightly, that they cut the pace to $5 billion a month in terms of the redemption cap. One of the big reasons they did that was to effectively go slower for longer and actually allow that balance sheet runoff to continue for a longer period of time, so that they can end up with a smaller balance sheet overall. So given that we're only sort of 3 months from the last tweak in terms of QT, I can't imagine them touching that this time around.
Yeah.
Absolutely, that makes sense. And just really quickly, we do have data in a couple minutes. Just want to go over really quickly what we are looking at. So for initial claims, we're looking at survey is 245,000. Continuing claims, 1.9 or 1 million, slightly less than what was last week. Housing starts is expecting minus 0.8%, and building permits at 0.0%. So that's what we will be looking at as soon as the data comes out in a few minutes.
And let me just ask Michael, on these jobless, this jobless claims number is a weekly number, so maybe it's a little better than some of the other numbers. I don't know. At what point does the Fed pull the fire alarm?
Yeah, well, given that we've got 2.5 minutes to the data, this comment could age especially poorly. But yeah, I think the jobless claims data thus far has really just spoken to the labour market being in a bit of inertia, and non-farm payrolls and jolts and everything kind of speaks to that, where companies are being very slow to lay people off, despite the degree of uncertainty that we're seeing. But companies are also being relatively slow to hire new employees. So we're seeing this issue where, and that's why continuing claims are at a cycle high. It's taking people longer to get back into employment when they leave their previous job. But I don't think it's a sign of Armageddon just yet. If we were to see initial claims up at 350,000, then yeah, we're going to sit here and become very, very worried about it. But all the time we're sort of bumbling along around current levels, and we're getting non-farm payrolls growth north of 100,000 a month. You kind of sat there going, okay, maybe the labour market's not as hot as it was, but it's certainly not cooling at any significant rate. And
That
now
makes
wait for
Absolutely.
jobless
And do you
claims to
think
come in
we're good?
horrifically.
No, so we'll keep an eye on that. But do you think, Michael, that all of the government layoffs that they did have, they all got a severance for like 8 months, and so are we going to see an influx in jobless claims in 8 months after these severance packages are over?
I mean, very potentially. I think that's actually managed to sort of smooth out the peak in terms of job losses, because, as you say, they've got those severance packages. are people going to use the time between now and September to find another job? If they do, then you're going to have a much lower peak in terms of claims than if all of the government employees were laid off at the same time. But we're coming up to the print, so I'll stop waffling now.
All right, we got a few more seconds. And let's see. So we have what did we have? Housing starts minus 9.8%. Expected was minus 0.8%. So housing starts way down. Building permits also down minus 2.0%. We have jobless claims came in dead on 245, exactly what was expected, and continuing claims 1.945 million, basically exactly what they were expecting.
Yeah,
Perfect.
we've got.
I don't look like a fool now.
Michael, repeat that. Yeah, no, we have no movement in the S&P right now. I mean, we're just kind of sitting around VWAP right now. It's 60-44-ish. So the needle was not even budged a little bit.
And that's very
No, what are your thoughts on the
given.
data?
Well, yeah, I was going to say, I mean, there's really not a lot to say about any of that, to be honest with you. A little bit of softness in the housing sector, which might be a concern. That housing starts number a big miss and below the bottom of the forecast range. So that bears some just bearing in the back of our minds. But to be honest, on a day where we've got the FOMC coming up in 6 or so hours, it's not really too surprising, especially with the data bang in line with expectations. It's hardly a surprise that the market's just sort of shrugged that off, and I think we now wait to hear from the FOMC later on.
Yeah, that seems to be in focus. Just one really quickly. Let me just throw in a question about the nonstop, unplanned news cycle. Are we to the point where the markets are kind of like, shrugging their shoulders when we get some crazy stuff coming out of Capitol Hill?
It's I don't want to say yes, because that's when we get into the realms of complacency, but I think just generally, whether it be politics, geopolitics, or even from the corporate side of things, there is so much noise these days that it is really hard to determine the signal from that. And maybe a really good example of that actually is the big beautiful bill that's going through Congress at the moment. It was about a week after it passed the House that everyone suddenly went, oh, hang on a minute, what's Section 899 that they've passed, which is about potentially weaponizing the US tax system? And that speaks to me to the fact that maybe markets are getting a little bit too comfortable and a little bit complacent and kind of going, well, we expect things to be noisy, we expect things to be a little bit mad. But when they are, we're not going to react and we're not going to discount that information as quickly or as accurately as we should. And I think that speaks to the potential for higher volatility and also volatility remaining elevated for longer.
And then I just had one last question on the bond market, because we have seen Gundalach, PIMCO, everybody basically has come out and said, don't buy the long end, bonds are terrible, sell everything. So are we at the point that we have too much negativity and we might see a rebound and in the bonds and kind of lowering of yields, or are we headed for another leg down?
I mean, I think there's a hell of a lot of negativity out there, as we all know. To be completely honest, I think anyone who's running around going, the US is going to default or ratings have been downgraded, so I need to urgently sell my treasury holdings. To me, that's complete and utter nonsense. I think if you look at the long end of the curve, the 10-year hovering around 4.5% in terms of yield, the 30-year hovering around 5% in terms of yield, they look like decent levels to be getting in from an institutional point of view on the long side. I can't imagine us moving particularly much lower in terms of price. And then at the front end, the argument for me is very easy. You look at the 2 year and you say, well, can you envisage a scenario where the Fed are aggressively dovish over the next 2 years? Yes, absolutely. If the labor market weakens quickly, if everything goes wrong with tariffs and the growth headwinds, the Fed are going to have to step on the gas pedal in terms of delivering rate cuts. On the flip side of that, can you imagine a scenario where they're aggressively hawkish over that time period? I'm really struggling on that one. So I do think we're kind of at that point of sort of peak hysteria when it comes to treasuries. And yeah, some of the weakness we've seen is probably there to be faded.
Very excellent. Michael, great commentary. Appreciate you being here with us today on NinjaTrader Live. I'm happy I met you. Looking forward to us talking again.
No, pleasure. Thanks for having me.
Thank you.
All right, Shai, good start to the morning. A lot of great information so far. Pumped up about it. And not only that, me and you are going to have another special session today, pre-FOMC analysis later on today.
We are. So I'll be back for crude inventories, and then we'll be back at 2 to check the market reaction.
Awesome. Thanks, Shai. It is that time of day where we phone a friend. We have Pharm in the house. Pharm, good morning. How are you?
Good morning. I'm doing well. How about yourself?
Pretty good. You look rested and calm and just ready to go.
I'm getting there. We still have some recovery to do after the wife's long trip, but feeling decently fresh. Got a little bit of sleep for the first time in a couple of weeks anyway. So we'll see. Just in time to have a day that I probably won't want to trade with FOMC. So we'll see.
On that note, is this like historically, is this a day you're just like, I'm not getting involved till after the dust settles?
I mean, yes and no. And I'll ask you the same. I'll generally pick off a trade or two in the morning if something really nice and juicy sets up. But like, I'm not one that trades the volatility when the mess is coming. I remember, I think one trade recently, I mean, and I'm talking like within the last year and a half, maybe, that I took a meaningful trade during the FOMC volatility. So I usually stay out of that. I know a lot of people love that. I'm a boomer. And when you're 150 years old like me, you just kind of, pick your spots and try to make your money. And like, I mean, why? Why would I do that? If I feel like I have an edge on most days to sit and be patient and pick off a nice trade, why am I going to put it in the hands of, some, algo that's doing crazy things in response to, the color tie that J Powell is wearing. So I'll trade in the mornings usually. And then for the most part, I'll shut it down 30 to 60 minutes before the rate announcement when things kind of start to get a little bit weird. And then, I'll usually let it settle out at least till the conference is over or about over. I just really want to maintain sort of a neutral bias in terms of at least the intermediate time frames and how I feel the market is actually reacting, because of course there's fake out after fake out after fake out, but in order for me to get involved kind of in the midst of it, I have to have an absolute spot on read and a perfect setup for me to even just bother with that. I just don't see much of a reason to gamble.
Yeah, not only that, this week is like a odd setup. We've got FOMC today. We have Juneteenth tomorrow. New York Stock Exchange is closed, abbreviated Globex session tomorrow. And then it's Friday, which is expiration Friday, quarterly expiration Friday. I mean, it's the weekend. So it's a really weird kind of 3 days now that we're going to go through, because you really only have that one day to recover on Friday. But Friday in itself might be a little bit wonky because of OpEx.
Yeah, and we talked about that yesterday. It'll be interesting, expiration. What a week, right? I mean, you get expiration, FOMC, and then options expiration. Definitely has the potential to change some things. And this weekly profile, like, you don't really want to put too much into a weekly volume profile after a Tuesday, right? A lot of week left, but I mean, it's showing some promise from a seller's perspective, to be honest. So it'll be very, very interesting to see if that's negated today on FOMC, or if we come out of that with this profile leaning just a bit bearish. Because, again, as a day trader, I prefer to have, volatility. So that usually means downside, or at least some downside and then upside, right? I would rather, at least if we're going to balance, I would rather balance in some kind of 140, 150 handle range where I can take trades on both sides at the edges. But I'm just not a huge fan of the grind, the slow grind upwards, where we get 35 handle days as a trade, as a day trader. So I mean, whether I'm bullish or bearish or whatever, it certainly is better trading if we loosen things up a little bit. And so I would like to see maybe a change of character out of this week, and I do think there's a window for that here, probably for the first real time. So I mean, we'll see though, right?
Yeah, I mean, just to follow up on this week, I mean, Monday we had a 109 point range high to low. Yesterday we had a 64 point range high to low. Today we're at 45. This is in my mind anyway, until it's not anyway, a typical kind of consolidation, just kind of wait and see mode anyway.
Yeah, I think that's right. And I will say, I guess it was Monday that I said it. It kind of looked like we saw a bit of an exit come in on Monday, and I'm paying attention to that. It was very similar in character of the tape to what I saw back in December to call for that large exit. This was nowhere near the size at all. And maybe like it just had something to do with the Middle East, but it seemed like somebody needed out. And so far, that high is held. And so at least, again, if you're not just looking at ES with the contract and all that kind of stuff, depending on what day you rolled. But I'm paying attention here, and I am leaning short today, and I am short on runners here. And so, I mean, we'll see. I think 60-50, we talked yesterday, right? Like the range had been, if you were on ESM, the range had been basically 6,000 to 60-50. Yeah. Now you can call that range 60-50 to 6,100. And we gave that back yesterday and have struggled to, kind of get back above there so far tonight. So interesting to see how that plays out of today. And it was kind of nice that we had the opportunity yesterday and a little bit of extra time to discuss, that P profile breakdown trade, before it happened. And then, we've seen how this profile has filled out quite a bit, right? We came in yesterday and it was basically a stick here, right? And then this volume, and then, sure enough, we left this volume trapped up here coming up, and we offered, just below 82s and broke this down and got the rotation down to 60-30s at yesterday's low. So again, some potential there. And, it was nice to cover, really just a technical trade that I think that, everybody should have in their arsenal there anyways.
Yeah, yesterday we flipped from I don't know how important this is, but I'm starting to track it more and more. A positive gamma environment to a negative gamma environment, and that's what happened, I think, yesterday, according to our friends at Mentor Q. I'm logging in right now to see what it is today, and the wheels in my the gerbils in my PC are waking up a little bit. Yeah, so we're still for the E-mini S&P in a negative gamma condition as well. I don't know. I think that when I see that, it just kind of, this is just me, but it kind of reinforces my bias. I think I'm with you. My bias is a little bit to the downside. The poll in the chat right now, 37% bullish, 30% bearish, 33% neutral. So kind of an even distribution of bullish, bearish, neutral in the chat as well. But no, I get my spider sense is telling me, man, maybe look for places to sell.
Yeah, I mean, at least until we get the meeting in the announcement, that's where I'm at here for these first moves today. And if I get stopped out of runners for today, so be it. But 60, 66 range, 60, 65, the weekly open, right? Monday's open on a cash hours basis. We are now trading below that. So the week is red from that perspective. We are building volume lower and lower. Now, these 60-30s are pretty huge. And this after hours spot, if you back out the 52.5 handles, or if you just looked at ESM, that was Friday's cash hours low, basically, on ESM. It basically was swept out and reclaimed. So, that too is a big spot, right? Because, from an SPX perspective, we would then be taking out Friday's low if we take out this overnight low. So that's going to be interesting. I did see that we've got the big iron condor seller is back today. Seems, on an FOMC day, that's a little bit brazen, perhaps, but I don't really see anything crazy coming out of FOMC. We all know what's going to happen. He's super wide. I want to say it was like 60-35, 60-40 SPX on the upside leg, and then 59-10, 15, something like that on the downside. So that would be, 59-10 would put us right about at 50. So that'd be about 59.65-ish on ES, continuous ESU. And that would be Friday's cash hours low on a, without back adjusting or anything like that. So that's interesting. And then, up there at, 60-40, that's going to be right up there, kind of kissing those 61.05s, maybe not quite. So interesting range for that condor. And, we'll see if that guy gets blown out today. I think he's had a couple of bad days recently, somewhat recently.
Those are so dangerous, man. I when I was a commodity broker back in the day, we'd have people wanting to put them on, and it's all fun and games until you have to get out in a hurry. There's no liquidity. The bid offer spread's humongous, and you got 4 legs of the spread you got to get out of. It's not it could end up ugly.
Yeah, definitely not, my preferred style of trading. There's a lot of really good vol traders. Actually, even in the Discord, there's people that just sell vol off my levels and the plans, right? So if they, we come into a key upside resistance, they're, selling call spreads against it, things of that nature. There's a lot of people that are fantastically profitable with that. It's just not really my style. I at least would prefer something like that, like tactical selling. If you're going to sell vol, like tactical selling of vol, and like with spreads maybe, so you're not like completely blowing your account. But yeah, to just load it up ahead of the day and just let it sit and, find out, whether you lost money or made money at the end of the day is interesting to me. Obviously, we're more active day traders, so of course that's not going to be our style. We want to at least have, a little bit more semblance of control than that on an intraday basis.
Yeah, and I'm looking at the gamma exposure level 1, Jax 1 they call it. It's just 60-50. We're not too far off of that, and it's not surprising that that's where we're at going into this, especially given it's a Wednesday before OPEX. So it's my guess is, I don't know, I could be wrong, but for most of the morning anyway, we might be hovering around that area in the subcontract.
I think that makes sense. And you mentioned negative gamma. I guess that's probably what I like to trade, really. I don't want to necessarily say it has to be a bearish trend, but negative gamma dealers are selling dips and buying rips, right?
Yeah.
And so that exacerbates volatility. And so, because of that, if you can get it in good with a short or a long, right, and it goes in your direction, you now have that wind at your back, pushing the trade in your direction. So I guess that's probably a better way for me to say, what I like trading is kind of more negative gamma environments than necessarily a bearish trend. Because in a purely bearish trend, it does trade quite differently, than bull trends. There's different types of trades, different types of executions to me. And I feel like bull trends are a lot easier to trade to get into a spot, generally because volatility is lower. But like bull trend with negative gamma is like perfect, I think, for me. That's really good trading.
Yeah, and it seems like, at least from a daily chart basis, that's what we're up against now. So it'll be interesting to see how it goes. Let me ask you about the Russell 2000. Just going into the Fed today, I always felt that market was a little bit more sensitive to anything that was said at the press conference. Any similar experience, or am I just making it up?
No, I think that's reasonable. And I feel like it's more sensitive anyways, because it's just like it's kind of higher beta in a way. I don't even know if that's the right word here, but the fact that it kind of really needs to live in a Goldilocks environment to really perform well. Where rates aren't too restrictive, inflation isn't too high, but growth isn't too low. So because of that, I mean, it can really hinge on anything that's said. It just really needs that perfect sweet spot to really feel comfortable. For me, anyways, getting long, for example, the Russell and staying long, because it just needs that perfect environment. It's just a basket of, a lot of these companies are not profitable. Right. And so if rates are too high and the cost of debt is extremely high, if growth is too low, then, the revenues take a hit. So the Russell's always been kind of a tricky index for me that I generally don't trade too often.
Yeah, no, I know. I like to just kind of look at it in relationship to the other three. I know a lot of traders like don't do that. Just stay in front of the market you're trading, focus on that one. But sometimes when the Russell's keeping pace or even doing better than the other stock index futures, in my mind, that's telling me that a broad base of participants are feeling good about what, the economic data or whatever they're looking at to make trade decisions. So that gives me a little bit more confidence if I'm going to change my bias. I'm definitely not changing it right now, but we'll see going forward after today. We'll see if that market moves at all.
Yeah, I think that's a good way to look at it. And that's kind of how I look at it as well, is almost just sort of a sentiment check. Because if they're willing to bid that, unless it's a squeeze situation, I talked about that with Delhi maybe a week or two ago, when the entire index is squeezing, especially if NQ is kind of chopping and weak, then it sort of reads to me as it might just be pressure on broad exposures, across hedge fund books, because a lot of times you'll get a long NQ, short Russell trade, and so when you see the NQ show some weakness and Russell squeezing, it's just usually a sign of a little bit of deleveraging potentially. But yeah, when it's just sort of organically bid and constructive, I generally feel like that's a pretty good indicator that the market is willing to put some risk on for sure.
Yeah. Oh, by the way, Carlos, New York Yankees in the chat. Good to see you, Carlos. Haven't said hi to you in a while. Appreciate you being here. NinjaTrader Live. Carlos's comment is downside will continue to be limited. I'm assuming he's referring to the equity markets. That seems to be the case. I mean, we talked about this yesterday. These have been resilient marketplaces. And, when I think about money flow, there is only so much money, right? And it's got to flow somewhere, right? Maybe it's in, money market funds. Maybe it's in the equity market. Maybe it's in treasuries. It's got to flow somewhere. So there's that relative flow, but equities have been pretty strong. Today, just kind of looking at the 30-year Treasury bond. I mean, we're almost at a 114 handle today. We're up a decent amount, or not a decent amount, a few ticks, but over the last couple of sessions, we've been up. We started off down at that 110 handle, I don't know, a couple of weeks ago, and this is also showing some signs of life, the longer end of the curve. And I don't know if I'm surprised by it. I'm actually not surprised by it. I'm surprised it's taken so long.
Boy, it's been tough to be in the long bonds, and I've mentioned I do have some TLT on from roughly those lows, and just sort of balancing that against energy exposure. This has been tough, right? I mean, we came into the year and there's a lot of uncertainty, and then we got to the point where like recession was priced at literally 69% probability of happening, and then that just completely and utterly collapsed, right? And so the bonds were initially bid. Then they sort of sold off, basically as the index bottomed. And so they've been kind of tough and range bound and sticky. And so now it's like, okay, with big, beautiful bill, are we going to see softening? I still kind of lean towards, perhaps yes. I mean, we've seen, housing starts today. We've seen, some numbers are coming in, not so great. But over time, it doesn't look like there's going to be a meaningful softening if policy, kind of stays the course. So maybe, bonds just kind of chop around for a little while longer until there's a good reason to buy them, I suppose.
Yeah, no, I did the same tilt trade in full disclosure. So we'll see what happens with that little mini investment. Um, in any event, yeah. So anyway, we'll see how this all plays out. I mean, it just seems to me everything from mortgages to Fed funds to even the 10-year and the 30-year yield it's been sticky going sideways. And just by a casual glance, I don't see much movement in those yields between now and the end of the calendar year.
Yeah, I mean, barring some significant change in data, which, of course, the way that policy seems to change its mind with this administration on a whim, like you never know. But yeah, I mean, barring some change, I think that's, probably right. But again, like this, I mean, this administration has, changed their mind quite frequently. So, maybe it does, but, as long as they're chopping and grinding to the upside, getting back to, ES, certainly that favors equity upside. And bulls are very much in control. I mean, we've talked about like a potential, window for weakness, here, you and I, and I don't just mean OpEx, but just, structurally, with, how this profile is developing. But I mean, like we could still pull back to, 5,700s and be constructive. I mean, like 5,850, like that's probably a buy, if seen. We can afford pullbacks because we really have not seen a whole lot in the way of pullbacks. Things have been very constructive. So, any downside is kind of still got to be a rental. I think for me to assume it's a day trade. If there's continuation to the downside, maybe you can hold something overnight, but until or unless sellers really prove something, there's not going to be any meaningful downside. And like you're going to have to take out a prior week's low on a cash hour basis. You're going to have to overlap value lower on a weekly basis. And now, of course, we have. I mean, what's interesting here is that we do have contract roll, and we haven't made a whole lot of upside progress here. So if you start to say like next week comes in and the entire volume profile is down here, then things are a little bit different. But for now, mostly chop and consolidation. These 60/50s are going to be super key today, and these 60/60s as well. To me, I'm using 50 to 53 half as sort of my major like initial pivot for today. Which doesn't leave me a whole lot of room down to yesterday's low, which was 60/30. But that sort of is my first move kind of pivot. I think above, 60, 66-ish. I mean, if you're making higher highs, higher lows, really above 60/50s, but for sure above 60, 66, then, sellers are probably getting their usual treatment. Now that's aside from some FOMC volatility, right? Because I mean, we could spike all the way up here to 60/80s and then be back, down at 60/50 in 30 seconds, right? So, but constructive action above 60/60s, then sellers are under pressure to defend these, 60/80s again, and I'm not going to be able to press the sell button, above there. I'll still be careful. Like I'm in this mode of, anytime we rip, up anywhere up here, I'm lightening up on longs, adding to shorts, just trying to have a somewhat blended book into today. And again, for day trades, if we're breaking away from these 60/50s to the downside, then I think sellers have something for the short term. So that's really, what I'm looking at for today. Ideally, sellers would cap these 60/50s and not even really violate this potential lower high here, and then drive through yesterday's low, run for the overnight low. That makes things interesting, because we've got the Globex open down here and that gap right around that 6,000 spot, which was so important on the last contract. And so that would complete the entire P breakdown from yesterday. 60/30s was really what I was looking for and mentioned that yesterday. But we could get this 6,000, and that would widen things out into FOMC. So, I would definitely love to see that.
Yeah, for sure. What happens? Let me ask you this theoretical. If we do break onto the upside but we see some exhaustion getting to 60/01, Would that trigger a short trade?
Yeah, I can definitely take a reactive short up top, because again, that's top of range basically for this. If you back out, the 52 and look at last week, that's basically top of range. So I'll definitely have my eyes open at the very top. I'm definitely not fishing around randomly in here in the 70s for any kind of a short. But if we do get all the way back up to top of range, I'm definitely not going to get long into top of range. I'll either be flat or looking for a reactive short. I do think, though, given how this weekly profile is shaping up, I do think it would be best for sellers to, continue to cap these 60s. And so we talk about the overnight high, overnight low. Not every day are they in like kind of key structural areas, but today it really is, right? And so to me, come in and sustain above the overnight high, gets you through these 60s, like before the print, then that's a pretty good look for bulls. And then you just have to deal, with the print. But for sellers, if they're going to sort of continue to build out this potentially, bearish weekly profile, they're going to go ahead and need to continue to establish value and volume lower and lower. And so, trades for me, we could come in here and sweep out yesterday's low, which is what, 60-30, like spot 5 or something like that. Sweep out, 30 to 32, reclaim, probably a long back up here to 60-50, 60-53. That's an okay trade. For me, any failure to sustain above these 60-50s could find a reasonable rotation back towards 60-30s. I will say, like NQ, we had some single prints on ES. You can kind of just see the ripper through here. This isn't a 30-minute chart, so you don't see that it's a single, but we had single prints on this move higher. They have filled on ES. They have not on NQ, so maybe that makes things a little bit trickier. But I do think there really are some nice rotational trades here, 60-30s to 60-50s, and kind of pick your side, look for a failure to break one side and take it the other way. I think that's clean. This isn't really necessarily a rotation for me, 60-53 to 60-60s. This is kind of more a spot that I was looking to potentially cap any kind of potential reclaim of 60-50s. And so far, that's what we've gotten. And then I also think 60-30s, for the most part, is pretty clean down to 6,000. There are a couple of spots in here. We talked about, Friday's low on ESM was basically like right here. And so, that's an okay spot. The 60-13 was kind of minor on the last on ESM. That was actually last week's cash open.
Yeah.
And so that's kind of minor, but I mostly think that's a reasonable rotation down to 6,000 from there. And then, above these 60-60s, I think you're pretty comfortably getting the 60-80s. That shouldn't be a problem there.
Yeah, I mean, for me, it's like I have this, I think everybody does, but some people are good at like getting past this cognitive bias, this belief perseverance. I'm still stuck in the mud here with this, the geopolitical conflicts, potential huge rise in crude oil prices, the deficit, the big beautiful bill. All of these things are creating this belief perseverance in my head saying, yeah, we're going to break, man. This is going to fall out of bed. And the reality of the situation isn't necessarily that. So, I don't know how you deal with it, but for me, it's like, I try to recognize when I have it, right? It's like, all right, hang on a second. What is the candle on the chart telling me on a weekly, daily, intraday chart? That's the story, right? Price is the story. It's not necessarily what Jim Cagnina thinks is going to happen in the world. How do you run? Do you run up against that ever or no?
Oh, yeah. I mean, absolutely. This is incredibly important. Incredibly important. And, the first thing is, I mean, we have like a lot of recovering baraholics in the Discord. And the reason they sort of come to me is because, I do like to trade the short side and frankly, very, very good at it. But I keep them out of trouble because, like, if I'm not shorting this thing, like, good luck. Like, you're going to get hurt. It's very, very unlikely that you're going to be short and I'm not, and you're going to do okay with the trade. Like, just going to say it, that it just is what it is. It's just a fact. If it's bearish, I'm in there. I'm in the mix. And so, if I'm not bearish, just stay away. And then the bulls appreciate it because, I tend to sniff it out really, really early when we're getting a potential change in character. But more specifically, like to your question about like how do you deal with this? To me, like it has to be treated like a video game. Like you're day trading. Like who cares? Like who cares if what Apple's valuation is or Microsoft's valuation is or like any of that? It's just a video game, and your job is to score as many points as you can. That's it, right? So like who cares what the fundamental background is? Who cares what the macro background is? Because that's a fantastic way to blow up your account. Just take points away from this market and just win the video game. And that's the way that I have to look at it. And there are still, though, I mean, there are still some days where, yeah, I mean, we're rallying on some nonsense. The background's horrible. And it's just like, you know what? This is bullshit. Fine, sit out. Like, don't take a long, just sit out. But I mean, you can't fight a strong tape if you're bearish. You've got to pick your spots. And so to me, it's a video game. Focus on collecting as many points as you can, whether that's to the long side or to the short side. But first and foremost, focus on the fact that it is a video game. It's all nonsense, as my friend Shrub Agnostics would say on X, and just score those points.
Yeah, that's great advice. We see these young order flow labs guys doing this too. I mean, they're looking at the tape, they have conviction, they're chipping away. Maybe maybe they'll take a few paper cuts, but they have conviction based on what they're seeing on the tape, and then boom, and they have some level of success. So it's good to see that younger generation's kind of adapting what you just said, kind of. And when I'm talking to Stowe and XYZ and those guys in the afternoon, they can care less what Chair Powell just said.
Yeah. That's a huge strength. I mean, that really is a huge strength for a day trader, being able to separate that out. Now, like it doesn't mean like don't look at the macros and how the market is, responding to this information, because I think there is valuable information there. There are plenty of traders that won't look at anything, and I believe that you can be successful if you know what you're doing, looking at absolutely nothing but your index. Yeah, I mean, if you can just separate out, any of that bias, which is really, really hard. For me, it again is just treating it like a video game and trying to score as many points as you can, whether it's on the long side or the short side. And I've said how sick that I am. When I'm frustrated, price won't go down. I'll take a long and I'll cover like 80% of it for like, invariably, if it's a long, I'm covering for like 5 handles, like most of it, and then leaving it thin, right? If it's a short, it's like, well, I'm going to round trip this for 50. I don't care, right? It's pretty sick, but I'll get in a long and like just joke with, some of my bearish friends, like, please stop me out. Come on, pull this rug. Oh no, it's going higher. I'm going to need a hot shower after this 100 handle long. This is disgusting. Like, I mean, find ways to make light of it so that your bias doesn't just crush your account.
Yeah, no, I hear you. So, Pharm, if you could hang tight with me a couple minutes. Now, Tanya is unable to come today. We got Kane popping in here early, but I'm hoping to, if I could share my screen, I want to just pop up a couple charts for you to take a peek at, Pharm, and give me a quick opinion on them.
Mm-hmm.
All right, let me get my screen going here. So just kind of let me know. Oh, there we go. So just thinking about the way you look at these things. What I have 3 days. This is 3 intraday charts. I don't have the volume profile spread across, but I do have them for each day. This is for the week. This is crude oil chart right now on my screen, and that's all the rage is crude oil right now. You see any clues here looking at the profile and looking at the highs and lows?
Let me take a look and get it a little bit bigger on my screen. It's kind of always hard to see when you're on Zoom at the same time and looking at the screens. I mean, it looks like you've got, last week you had sort of that large move up, and we, partially filled in some of that volume, but not all of it. But it looks constructive to me, sort of in that upper volume range from last week, and we're sort of hanging around in there. This spot around 72 right now is incredibly key, and 72.50, 72.60 has always been strong. But I mean, if you look at the profile for the overnight session, for example, it's slightly overlapping yesterday's value, just a little bit higher, and then relative to Monday, we had Tuesday overlapping higher, but I see that as more like a kind of a 3-day balance, sort of in the top of last week's volume. And so it's definitely consolidating here. And basically, as long as it's not giving back, probably 71-ish, it's probably okay to remain constructive. Maybe you could maybe say 71.50s. You probably don't want to see lower than that. But to me, it looks reasonably constructive. And I would look at like 72.60s, 72.50s to potentially hold on dips. But I mean, who the hell knows with FOMC, right? Things could get a little bit wild and you never know what they're going to say. But that's kind of the spots that I would be looking for. But it looks constructive to me.
Awesome. And then real quickly, let's just do the same exercise with gold. And then we'll get Kane in here. I have 3 days up on gold right now. If you could toggle your charts to GC
Yeah.
25.
Yeah. Yeah. GC kind of looks meh to me. Nothing super clean. I would like to see maybe 33.70s. See if that holds, maybe to put in a bid. We're kind of backfilling some of last week's profile. The dailies that you've got there, you can see it's just kind of choppy, grindy balance, kind of to the downside, but like not meaningfully. So a little bit choppy and gross to me. So I'd like to see an attempted break from that range. I mean, either above 34.25-ish and holding, that I think you're getting a rotation back towards last week's high. Or if you got some quick snap down to, around those 33.70s, I would like to see how that responds. And I would probably be looking to take that back up to 33.93-ish, basically, these lows that we're kind of looking at now. And then see from there if I could cross that back up to 34.20 if I was looking at a big picture trade on gold here.
Got it. Awesome, man. Appreciate that. It was great talking to you this week. I think if we proved anything, it's like Deli could take more vacations if he wants.
I'm sure he knows that, the show's in good hands in his absence. So I'm sure he feels pretty comfortable being able to leave.
Yeah. Well, no, he's working hard. He's doing business over in the UK. So we'll get a briefing from him when he gets back. But we won't see you again until Monday, right? Tomorrow's an off day. Friday is other stuff is happening. So have a great weekend, man.
You take care. We'll see you.
All right. Thanks, Pharm. By the
Yep.
way, I cut and paste his X link into the chat, everybody. So feel free to follow him. It's a good follow for sure. So again, Tanya is out today. And so what we did was we phoned a friend. We went to the dugout. We got our strongest relief pitcher we could find to pop in here right now. And we have a trader Kane fresh off the UK Traders Expo. Good morning, or I should say afternoon. Kane, how are you, man?
Yeah, I'm good. How are you?
You look good. Were you at the pub with Deli all night and Marty?
We may have been at the pub for a few hours yesterday. Yeah, we may have. Yeah, it was good. It was good. Deli working hard or hardly working, not sure. He's definitely doing something though. But no, it was good. It was nice. Short notice, but yeah, weather here is glorious right now, so we took advantage of it. But yeah, it was hard to pull me back in from the sun, to be honest, especially on a week like this, right? So yeah, it's tough. How
Yeah.
are you though, Jim? Everything good?
Oh yeah, no, I'm good, man. Everything is good. Having a good time here. Actually, in all seriousness, missing Deli. Well, I know he'll be back next week,
Yeah.
which is good. And you got to meet Marty, right? Marty's a hoot. He's a great guy, isn't he?
Yeah. Marty and Max. Yeah. So yeah, no, it was good. I know those guys are in town for a futures conference. They had some good things to say about that. But yeah, it was nice just to meet everyone in person. I met Daddy and the guys based out in Naples a few times, but it was nice to meet Marty, nice to meet Max, speaking about the future of NinjaTrader and what happens, these types of conversations that happen. So
Yeah.
it was good. It was really good. It was really refreshing as well. But yeah, man, Delhi he was just loving the sun. He brought it with him, right? I mean, the summer here in the UK lasts about 3 days, and Delhi's here for all three of them. So yeah, he's loving it. He is loving it. But yeah, what's your view on the market right now? I'll tell you mine. I'm really not that guy to trade this week. Rollover, Fed, bank holiday. like just everything, all happening in the world right now. This is like especially combining and adding the sun in my life. This is just a big risk off week for me. I mean, I literally haven't clicked the button once. A
Yeah.
bit.
I mean, and by the way, before I tell my view, Max, but I don't know if this came up, but Max, who you met, who works closely with Marty at NinjaTrader,
Yeah.
he's like a black belt in like jujitsu or something. You wouldn't know it by looking at him, but he's like a
No.
little, because he's a smaller dude, very unassuming, very nice guy, but you just don't look at him the wrong way, man. He'll snap your pinky off.
Yeah. No. 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 He looks like a little secret assassin. Do you know what I mean?
Yeah.
Like, yeah. 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 I mean, we had a long conversation, and just amazing guy. Him, Marty, and
Yeah.
Delhi. You know, they're just. Yeah, I mean,
Yeah.
everyone that came down all said the same thing. All good people, you know. So yeah. So tell me, what's your view on the market?
I'll be honest with you. I was just talking to Pharm about this. I have this cognitive bias that the world is falling apart, and the deficits are out of control, and the equity market should go to zero. But the opposite is happening. This is a super resilient equity market. It's in a bearish disposition. But at the same token, I have a short-term, negative bias. I'm looking for places to sell right now, at least until the dust settles after OPEX and after the FOMC. That's just kind of what my mindset is right now. And I know a little bit of it is just cognitive bias which might be wrong, but I'll keep an eye on it. Price is king right now.
Yeah, me too. To be honest, I mean, look, I'm not the biggest fan of this infinite bid up. Like, it just has to correct at some point, and I know the moment that I'll get on side, it will correct. So I'm waiting for that correction before I can really start putting my foot to the floor again. And the sad part about trading is I just have to wait for that, and it's boring as heck in the middle.
Yeah.
So I'm in that bored phase, which I guess where everybody just does all the things they shouldn't do. Um, and like, is it tempting to, hit my setups when they hit? Yeah, but right now they're not playing like they normally do because there's just infinite bid, and it's just most of my setups are triggering to the short side. Why? Because I sell above highs and I buy below lows, and we're not really trading below lows that much. We're just
Yeah.
slowly grinding up. So at the moment, it's do I just consistently trade or do I just wait for these day in day out, and I would imagine that a lot of people are losing right now because this infinite bid, it's hard to trade unless you are just someone that trades these infinite breakouts, which I'm not that guy, and I've said this before. I'm really happy to everyone that's absolutely killing the market right now, but for me it's really tough to do nothing here, and especially with a week like this week, it's this is the one week that I want to be in Hawaii with a cocktail in my hand and forget about the market till Monday. It's the only week. Merritt said it's a good week to take a vacation. Yeah, it's the one week of the year you should not touch this. Like, everything is on side to say you're not that guy. I can accept I'm not that guy this week, and we just have to be bored, right?
Yeah, I agree with that personally for sure. But there's going to be some traders that are going to say, okay, the trade today is, sell the top of the value area, buy the bottom of the value area. We're going to revert to the mean or the VWAP because we're just in a wait and see mode. We know where price happiness is from a volume point of view. Let's just kind of keep buying, selling on these two levels, and then we're going to be right until we're wrong, and hopefully there won't be a breakout one way or the other. And something from Capitol Hill could do that, or geopolitically could do it, but. That might be the mindset of a lot of folks. And I'm not saying that's a wrong mindset. It's just a different mindset. And it's a less patient mindset, right? You're taking the position, I'm just going to wait, dude, for my setup. It's boring as all hell. This is the best, boringest job there is. I
Mm.
don't know who told me that. A long time ago, someone told me that. And it's true, I think.
Oh, 100%. Like, don't get me wrong. like I said, there are people that will sell the very high or buy the low or do all these things, and it will play out. Like, I'm fully aware of that, but like, I don't trade that way. That's not how I trade. I trade a general mean reversion that these assets typically like to revert to the mean on a day, on an average day. And right now, they have not been trading back to the mean reversion of the range. So it's it's hard for me to just simply buy at the top of an area and sell at the bottom. I like to play the inverse, which I think a lot of people do, right, in general. Um, but yeah, there's always going to be someone out there killing it. And that's fine. But when I'm killing it, they're not. So that's also fun, and right now everyone else is all the winners are winning and all the losers are losing, and I'm just doing nothing. So, that's the luxury of this job. Someone's always winning, someone's always losing, and right now I'm doing neither. So
Yeah, I mean, we have a 45 handle range in the SPOOs. Yesterday was only 63. It's definitely wait and see mode right now for the markets in general. So maybe traders should follow suit and think the same way.
yeah, look, if something's going to happen, it's going to happen today, right? With the Fed announcement, maybe they do something, maybe they don't, and the market will react accordingly. Now, I don't know what they're going to do. I have no bias around what they're going to do. I imagine they'll probably do nothing. The market looks pretty healthy. They're looking at every probably statistic that they use, and everything's pointing in the right direction right now for them. So why would they do anything? But I know one thing: the Fed do things that don't normally make sense, and when they're supposed to do nothing, they do something, and when they're supposed to do something, they do nothing. That's the general consensus across the board, right? So do is wait and see. And for me right now, am I going to sit here and click the button before that decision? No, I'm not. Am I going to sit here and click the button before a bank holiday tomorrow? No, I'm not. And the Friday after a bank holiday, after a Fed rate, all these things, it's like, have I back tested and traded a bunch of those conditions to know that my model is going to execute well? No, I haven't. So for me, it's a risk off week. Do everything other than trade. If I really, really, really want to trade, it's small, but I don't. I just don't, Jim. I don't want to trade this right now, and I don't have the itch to be involved in the market. And I'll let the market do its thing without me right now, which I know a lot of people are probably really upset to hear, but I'm in this for the long haul, and I can sit on my hands for a week and do nothing, or go out and play paddle with my friends and go get coffee and do all the things I really enjoy doing. Um, than lose a bunch of money because I think the market's going to do something on a week where it's probably not.
Yeah, well, that's a mature point of view, right? That's a mature point of view, especially from a younger fellow like yourself. Uh, because you're contagious. Because you have this impulse, right? We all have this impulse. You can't deny it. You just want the action. You want to get involved. If you're if you're at the casino, and you see 10 reds in a row, you want to play the black. You
Of
can't.
course.
It doesn't make any sense, but you want to do it. And so it takes some personal fortitude to say, all right, I don't need the action today because it's not a wise thing to do. This is a business decision on my part, and I'd rather be doing other things today. And so I think that's that's a good lesson, I think, for folks. When I was younger, I always had to be. Someone told me this too, and this is bad advice. Always be in a trade. And I did. I was always in a trade, and I was always, my blood pressure, was bad, and I was always getting upset or euphoric, one of the two. And it was not a way to roll, man. That was not a good lifestyle.
No. And do you know what, Jim? I know some people say put a trade on, walk away, put your stop in, put your profit, do whatever. But 99% of people can't leave their trade alone. They want to know what's going on with it, right? And especially with nowadays, all I have to do is pick this up and go, all right, what's my trade doing? And then suddenly it's on my hand all day, every day. And right now, like, oh, I could not care what the Nasdaq or the ES is going to do until 2:30 around market close. I'll look and say, right, what happened at FOMC today? What was the rate decision? What was this? Because if I'm there at the time, it's going up and whatever, and I can find a reason to get in, I'd probably get in. So I just do everything to not have the ability to click the button, right? And that's just a lesson I've learned over the years. And like I said, I'm like you said, sorry, be always look on a good trading day. I like to be in a trade for as long as possible. It keeps me out of bad trades. I get that, right? But at the same time, there comes a point where I don't want to be in that trade anymore, and I don't want to be in a trade because I really enjoy living my life. And if I'm in a trade, it really affects me living my life. And anyone can sit there and say, "Oh, I'm not emotional about trading." Great, but maybe you're just not trading the way that I trade or the size that I trade on an average day. I don't want to be in a 25, 30 mini long at 3 o'clock in, 4 o'clock my time. I want to get in the market, get out of it, and go live my life because I like trading, but I like it a lot less than living my life. So
Yeah,
that's it, really.
that's great advice. Call me Jim in the chat says, okay, Jim, hi Jim. How do you occupy your mind when you're sitting on your hands so that it's difficult on me? I'll answer first, and I think Kane just told us how he does it. But I'm a simple man. I'll walk the dog. I'll go down to the brew pub, which is about, luckily for me, it's only about 100 yards from my porch. I'll take Mrs. Keggs out to lunch or whatever it is.
Mm.
I've got things to do that seem kind of pedestrian, but I enjoy doing them. So that's what I do. And then if I'm really itching, I'm really want to do something, then I'll do some technical analysis work. I'll do some back testing work. As an example, last week I was experimenting with different stochastic inputs for shorter term intraday charts, just to see if different settings are giving me some different results, and understanding the equation of stochastics. It's a very simple equation. And then go on to the next one. So that's what I do personally. But I get you, man. Do what makes you happy.
Yeah. I mean, look, I like spending time with my friends, my family. It sounds very cliche, very boring, all those things, but look, an average trading day for me is a few hours in between a lot of hours, right? Either side of, I trade the London session, I trade the New York session. So early morning for me, I get to look at the market, and around, it's 2:30 in the afternoon for me right now. Around 2:30, the market opens. I stick around here till 4. I'm up, done my trading day at either end, and all of my friends are still at their day jobs. So I get to do all my errands, go get coffee with my friends that have the day off, go rehearse or do everything that I'm probably delaying till the weekend. I go do all those things. I understand that some people are, they have day jobs, they have those things, but you have to just find things that take you away from the charts because it is hard. And, I read the statistic somewhere. It's like the dopamine you get from trading is that of gambling, but it's worse because you feel like even when you're gambling and you simply are waiting for it to do something, you feel like you have an edge or you feel like you have a gut feel where when you go to a casino, you almost know it's complete gambling. So that gives you that, I guess, morality compass there. But yeah, look, I just understand that this could be quite addictive, and stepping away during a week where I know my edge is definitely not going to be present is really important to me. And that is part of my edge, actually. So yeah.
So let me ask you, have you ever done this? I've done this before. Like I've just had, a bad week, right? It was a bad week. I lost money, nothing worked for me. And I'm feeling bad about myself, right? I feel
Mm.
like it's my fault, my mistakes. I'm not worthy. And then, the weekend comes, then maybe I'll take a week off, and then all of a sudden I'm feeling good again, right?
Mm.
I'm like, all right, now I'm ready to go again. It's that emotional thing you want to try to just eliminate.
Look, someone tells me that trade you can trade like non-emotionally, I'd just say then why would you even do it? Because you at that point you can just put your brain into an algorithm somewhere and let that execute for you and take the complete emotion out of it. If it's 100% mechanical, my model is not 100% mechanical. Sure, parts of it are, parts of it aren't. But I just understand that, it's a game of miles, not inches. And, some people say it's days, not decades, or decades, not days. Like, I'm just in this for the long haul, right? And I understand that over a period of, a year, I'm going to have a bad week. I'm going to have a bad month. But on Monday, it's like I can't, drag my losses next day because then it's going to affect everything else. Like Jared said to Stowe the other day, You can't carry your losses to the next day. You have to just wipe that slate clean. And sadly, I think a lot of people have to figure that out the hard way. You know, you carry those losses, they're going to compound. Just like you carry those wins, they're going to compound. If you treat every day like a fresh slate, you'll have a lot easier run at this than someone that carries those. So yeah. But Jim, good chat. We got 40 seconds till the open, so I'm sure chat want me to start talking some technical analysis and where this thing's going to go.
All right, man. Well, listen, I appreciate you popping in a little bit early. I'm glad that you were hanging out with the boys at the pub in the UK. I'm jealous I didn't get to go. So next, I'm gonna try to strong arm somebody so I could get over there and see you.
Next time, Jim. Next time, 100%.
All right, folks. Let's watch Trader Kane. I'm gonna take some notes. Be in the chat. Good luck today, buddy.
Appreciate you, mate. Speak to you soon. Chat while we got the open, literally right now. As I was kind of saying to Jim, it's not really a trade day for me. I'll still mark out my model and what I really want to see happen, but for me, it's yeah. I mean, it's looking pretty slow, and I just understand that I'm really not the guy to be trading on a Fed day. Combined with the bank holiday and rollover week, you know, some options expiring as well. VIX options expired yesterday. Rollover week, volumes all still split a little bit. So yeah, kind of marked out this low pre-open and want to see a good reaction out of here, potentially drive into this high. Again, not really looking to touch it an awful bunch. We haven't really gone anywhere all day. Had this drop. Reaction off of this area is kind of important, but I'm not actually looking to click anything. So yeah. Leo, sir, how are you? How are you? Sure. Maybe. Had a red week last week. I feel you. My edge is really not that strong an environment as intraday reversals. Yeah, but it's important to just accept when your edge is not that strong. And it's hard to do, right? In all honesty. Because you feel like you have a strong edge all the time. But the reality is you don't. And you either need to accept that early or the market will teach you that. And trust me, I think you'd rather accept it than make the market teach you that, in all honesty. What's up? What's up? Hope everyone's well. 1,000 of you, 160 likes. You know the drill. Let's get that like counter up, boys and girls. Very tight right now. The whole of the market, you know, I've been analyzing this for earlier with a couple of friends and students. It's just for me, I'm a fifth. I want to see all legs retraced, and right now this is pretty much retraced and rebalanced most of the legs in either direction. So I'm not expecting a big move, and I'm expecting a bit of a bigger move with the Fed rate. To be honest, the weather is great here, Justin, as well. Yeah. Leo's edge is he has power and retainer. That is true. We didn't want to say that on air because the man in the black van will come get you. He works at the CME, so if you say too much, he'll come and kidnap you, and that's it. No more trading, and then what? Full transparency, he doesn't work at the CME. It's just a joke. Before CME starts suing me. What's everyone looking at today? Anyone looking at anything? People sidelined? What's the crack? Hey, Lorianne. What am I doing up this early? XY, you know what you're doing. You're coming to see me. That's what you're doing. Sidelined. Yeah. Looking forward to my paddle match this evening. Yeah, if you guys haven't played paddle, definitely do it. It's good fun. Definitely good fun. The boys and the girls. Your short corn futures. Fair enough. I don't know enough about corn. Good afternoon, Jordan. What's paddle? Paddle's like tennis inside a glass box. Oh, Sean, you might want to chill out with that, my boy. Yeah, it's massively popular in Spain. Jose, I don't actually really like football, and football for most people is American football. I'm talking soccer. I'm not a massive soccer fan. Um, but yeah, nice little push lower here. Yes, we're really lagging and keep breaking lows. Whoa. ES starts to fall here, and we could get a bit of a nasty drop on Nazi. My main area for the drop would be around this 21.85 level, 885 down here. We'll see though. Again, not really doing anything. Like racquetball, it's like pickleball, just in a glass container, basically. Do I mountain bike? I don't mountain bike, to be honest. Lucille, her came from the top after today's Asia range was taken. I believe price will go to Asia low, possibly even Monday's midnight open. It's a good little, yeah, I like that, Lucille. I did frame this up here, this little leg. It's a typical leg that I would like to short around 6. It happened at 5, but for me, this 6 o'clock open is I'm a bit skeptical of it. We didn't trade into the high, no daily high taken. We're still actually trading a bit lower. We took previous day low. So for me, if anything, I would actually look to frame longs out of this area down here. Invalidation below this 21.862 level. But chat, in all honesty, I'm not actually looking to press the button today. Am I actually 6'5"? I am actually 6'5", yeah. I am. Yeah, a lot of options will be balancing. That is correct. And thank you today, Megan. It's not a bad shout. Jan, I appreciate you. How many doors have I ran into? So the average or the standard door height in the UK is 6'6", so none, or actually it's 6'7". But if I wear like boots, then I have to dip. Just one micro. Yeah. Screen's laggy. Apologies, guys, if the internet's playing up a little bit. Not really much I can do about that. How's the air up here? It's thinner up here. Yeah. Get altitude sickness sometimes. How do I fit into a sports car? I don't. That's the problem. Most sports cars I do not fit into. Yeah, it's sad, right? Just watching Chart Fanatics looks fun. What is the 1 day plus M line? This is basically a statistical data point from the midnight open. So we typically trade around this level away from it in either direction before expanding on the day. Just a data point that I have marked. Buy a bicycle, doesn't better. What am I buying a bicycle for? I've ever considered sports in parallel to trading. I used to play rugby. Typical, blew my knee out. You know, if I didn't, I would have been a professional. But I obviously, I'm not. But no, in all honesty, I played rugby at a pretty amateur level. So yeah, it is what it is. But I enjoyed it. But yeah, I blew my knee playing it. So pretty bad. I played number 8. Yeah, played lock. I played lock number 8. I'm too slow to be a flanker. So prop. Wow, I'd be like the world's tallest prop ever, I think. Snow and XY, I've never said I don't plan on pressing the button today. They trade order flow. They trade differently to me, right? So the difference is like Stow and XY, and again, I'm not speaking on their behalf, is they'll trade for they'll trade for like a much smaller move, right? And they scale out and scale out and leave runners. I don't trade like that. That's just who I'm just not that guy. I trade from extreme to extreme. So I hold those trades for a bit longer. And on a day like today, I'm not expecting that to happen. So I used to be an adventurer, so I took an arrow to the knee. What a game. What a game. Does anyone else know what that's that's from? Am I still trading with props or only my personal? Trading my personal mainly. I did recently buy a bunch of prop challenges. And yeah, so we're going to trade them a few, but don't ask me which because I will not tell you. If you go to my Twitter, you can see. Skyrim, yeah, good game. But yeah, anyway, I don't fit in supercars, which is why I own a truck. But there are a few supercars, they're just a little bit more expensive. So yeah, we'll see, chat, we'll see. RuneScape, what a game. All really good games, eh? Why buy prop at all if I've got the funds? Okay, so let me ask you this question. If you knew you were a good runner and someone told you, if you give me $100 and you can run X amount of distance in X amount of time, I'll give you 15K. Would you take it? Even though you could just run and you can just run on your own, you can do it for oxygen and you can do it for the love of it. Would you do it? If you knew you were a good runner, I would do it. Why wouldn't you do it? It's like a short-term interest loan. It's like a short-term high interest loan in my head, you know? Hey, look. Anyway, we're not going to get into this, right? But I'll end it on this. Sure, they're shady. I understand that. Have I been paid from them in the past? Yes, I have. Um, if for whatever reason they all go under tomorrow, is my life going to be detrimentally different if I don't get the money that I'm owed from them? No. So at that point, it's kind of a asymmetric bet to the upside for me, right? There's no such thing as zero risk. I said that. I actually never said there's no risk. What is it? Do I think on the NQ daily right now? Kind of ranging. Kind of it, really. A 50K prop account is really a 2.5K cash account without paying monthly fees or sharing profits. Yeah, true. Then instead of spending $150, deposit 2.5 grand. Why did I start trading and what made me start? I wanted to buy a Lamborghini at 16 and retire my parents and do all the things that everyone dreams of doing when they're a kid. Spent a bunch of years getting scammed, spent a bunch of years figuring it out, and then spent a bunch of years making good money. How much would I risk on a 2.5K cash? At that point, I'd probably just trade one micro, whatever that is. So can't really tell you how much you would risk because you have a contract limit. You can't, it's not like you can risk for $1, you know. You'd have to have a very tight stop loss on one micro at that point. Well, I trade the QQQs, but watch the ES. I don't trade the QQQ, and I do watch ES. I trade the NQ. It's like asking me why I trade 61 and care about Dixie. So same thing. The volume, the actual weighted volume on the ES is bigger, right? Do I have a break-even strategy? I do. Well, sorry, I'm not sure we're talking the same thing. Do I have a strategy for getting break-even, or do I have a strategy that is consistently break-even? What's the question? A strategy for going break even. I do have a strategy for going break even. Yes, I do. Are you bullish or bearish if we take all-time high? It's a bit of a trick question. If the chart goes up, are you bullish? Probably. What do I trade the entire year? It depends. It depends what price action's like. I typically like to take summer off. Like I said, guys, I do really enjoy living my life, and especially when the sun's out, it's like it's hard to convince me to stick around here, you know? Like I look at the chart. What's the question? Sorry. Inversion, not reversion. What am I today? Uh, I would say a lot of thing until the Fed decision, be my guess. Yeah, that would be my guess. Sideways. The chart will go right, it will go up and down. Probably won't do either consistently. So when I first started prop firm trading, did I have a set take profit? Um, yeah, I did. Look, guys, I don't really want to get into the whole prop conversation. Sorry, but I just don't. Am I taking any trades? No, I'm not. Sorry. I was negative 800 on my 50K funded Apex account with zero. How do I go about it now? Um, I don't really know, in all honesty. I don't know how you trade. I don't know what you look like. I look like. Sorry, I don't know what the account looks like. I don't know what your model looks like. I don't know anything. Like you're asking me, Kane, if I had however much, the ultimate I would say is down risk. Keep doing what you're doing, but down risk, especially if you believe in it. I don't really know what you want me to do to say. Kane with the sunglasses on because no dark mode. True. Will I read you a story if I'm not going to give you signals? Sure. What story do you want to know, Matthew? The candles on the right of the other candles are just higher time frame candles. So right now it's showing the 15-minute chart. So if we look at the 15-minute chart right now, oh, sorry, was I on the 1 minute? No, it was the 5-minute chart. So it's the hourly. Yeah, so it's just showing me the hourly charts. So they just show me the time frames that I look for. Do you have a favorite A1 setup for the day? Yeah, 10 a.m. reversal, pretty much. That's it. What's my misconception that I had about trading in my early years that's been beneficial to know? That the more I trade, the better I'll get at it. Oh, sorry, chat. Has it been hard to trade TLM this month? It has. It really has. It's okay. Uh, Wooloo, I'm not doing anything other than answering questions today. How often does 10 a.m. reverse opposed to continue? I guess it depends on our definition of reverse, right? How often does it do a full re-sweep of the entire day's price action? Very rarely. So yeah. Good morning, Mr. Merritt. How are you? How do I deal with payouts being denied? I have to accept that the game I am playing, I don't markets get to set the rules. I play by the rules I am given, you know? Now that I've made it, what do I spend myself time by yourself after playing paddle? You give advice, help people, invest in companies, start companies, you know? Do I think we'll get much play before two? Probably not. I'm not banking on it anyway. That's for sure. I like this. I like this reaction out of this low though. Kind of tells me that this high is the draw, I guess, at some point. Drop, push up, retrace, push up. You know, like if we use this logic, right? Here to here, where do we want to see it reverse from? Somewhere around here, 50% on it, this area. Some pullback. Where do we want to see it reverse from if it's set to go higher? You know, somewhere around here. Push back. Even trades lower at the open, takes out this. To me, it would say that this now has to go, potentially even up here. That's kind of what I'm looking at. Am I clicking the button? No, I'm not. Oh, tired. Tired. So I think, yeah, no, I don't chat. What should we talk about, chat? We've got an hour, and I'm really not interested in the chart. So what should we talk about? You can't target that high as it's a line down reversal. Okay. FTT, you have a question about my model. Go on. Do I like tennis? I don't mind it. We're not going to really get into the war. Sorry. Manipulation is a word that's meaningless in markets, priced as its own discovery. Order flow. I don't know enough about order flow to comment about best lawnmower after gardener. I don't even mow my own lawn. How do you ask market mummy? Ask market mummy what for order flow? Sure, can do. Do I hunt pheasants? I don't really hunt. My dad's a big hunter, but how do you master your mind to trade properly? Well, you have to ask yourself, like, do you want to do this forever? If you do, like, you have to be pretty good at it. And if you want to be pretty good at it, you have to understand that most of it's mental, right? My average score for a round of golf. If you asked me last year, it would have been like high 80s. You ask me now, honestly, brother, I would shoot over 100, 10 out of 10 times. It's pretty bad right now. I haven't played golf in a minute. I'm gonna get back onto it though, because we're gonna have to do that. We're gonna have to do that golf trip, you know. So yeah, right now I merit pretty bad. My golf clubs haven't seen the light of day in a while. What's the price of carrots? Yeah, fair enough. I get your point. Yeah, look, some people are cut out for holding winners, some people aren't. Either way, I think the most important thing you can do um is try and pay yourself, you know. That's it. What are the best dishes? I'm not a massive foodie, probably. I like what I like. I like nice restaurants, but yeah, nice squeeze, yeah. Dudes from Axia Traders wrote it. Traders of the time. How to stay humble after going average salary to having money. Look, listen, I met some incredibly rich people in my time. They're normal human beings. They all have problems. And regardless of having money or not having money, everyone is living for the first time, and everyone is everyone has relative problems to their life. Do I agree that London is the best city in the world during the summer? I do. I actually do agree with that. It's can't be beat, actually, well, at least in my opinion. It cannot be beat. Can't. And everyone's living for the last time. True. Let's talk more trading. Well, you were in the wrong place, my boy. So you could take a run and jump. You want me to force you want me to force trades for your benefit? Idiot. T trades face real before GTA 6. Yeah, no, bro. I don't even care what you say anymore. Don't force any trade. You missed the part because you didn't turn up on time where I said I wasn't interested in trading today. So, but I have to repeat that because you didn't turn up. So crazy from you. Why don't you ask me a genuine question instead of like, Kane, what do you want to see the market do, regardless if you want to trade or not? That might be a good question. But I'm asking myself that. Anyway, I've been to Australia. I've never been to Australia. I imagine T-Trades will dox his face before GTA 6. Uh, but again, I don't really know. Could see a good reversal here. ES took out this high. Again, I'm actually not expecting this to do anything other than grind a little bit. When are you getting some proper watch? I don't know, maybe soon. Maybe very soon, actually. Oh, little does he know. Can you please have my Chrome Hearts double dagger? My double dagger? No. What watch do I want? Um, we're not gonna get into what watch I want, chat. I don't even know the price of carrots, so but we love watches. Yeah. What do you think the market would do regardless if you won't trade it? I think in general, the market is most likely going to range today in and around this range. So for me, it's low probability for my sort of setup, right? I would have liked to have got some sort of long away from here, frame it back towards the high, especially because we could have got in right around here, like this area. Um, or in fact, even down here, I would never have actually took this. I would have waited. But for me, NQ looks a bit slow, bailing out of these highs at least short term, and ES looks a bit stronger, kind of push through these highs, right? So yeah, you bet it's a protect the leap. How much you want to bet? Is my model derived from ICT? If so, what do I think of him? Um, sure, in some way, I guess. What do I think of him? He's a good guy. A nice little 56, 64. Well, let's have a look. Let's see what this is. This with a green strap. Could be nice, man. Could be nice. You prefer the black strap? Mm, you know what? The green is a bit. It's not very green for me, in all honesty. They've got I think there's like a khaki version of it, right? I haven't actually seen the black in person though. What I do really like is the rose gold olive day date, I think. Datejust, maybe. I'm not sure. I'm not a massive watch guy. I just like that watch, the olive one, the rose gold one. It's really nice. Day date, there you go. Yeah. Big Kane in the building. Mr. Lee, how are you? That rose gold is gorgeous one day. Yeah. Yeah, we're stalling here. I don't really like that, especially for the bias. What side of London do I live in? I don't actually live in London. I live just outside, but I'm not going to tell you exactly where I live because it'd be silly, right? Just know that it's very sunny here. I see the model play out in London session. It did play out in London session. There are a few times it played out actually. FOMC then holiday in the US, so awful to next week. Yes, exactly. I agree with you, Ron. Lots of landmines. Yeah. Anyway, what I'm really trying to get is I'm trying to get that platinum day date, that platinum Daytona. That's a watch, right? That is a watch. That's a watch and a half. If only I knew someone with a platinum Daytona. Sorry, I think my internet's playing up a little bit, guys. I know a guy that has one. I know a guy that has one as well. Rejection out of here. Not looking too hot. ES deviated this high. I'm really expecting nothing. Ugh. Rolex doesn't keep good time. For a watch enthusiast, that would matter on. I'm not that big of a watch enthusiast. I just really care the way it looks, in all honesty. Just being honest. Just telling you how it is. Rolex is a status symbol. I think they're just good, like especially the good ones. They're good store of value as well. You buy a good one, you're not going to lose too much on it. Probably beat inflation over time, and you get to wear it. So if you look after it, why wouldn't you? Right? I kind of You can get me one for 6K. What? You can get me a platinum Daytona for £26,000. I think they retail more for that, more than that, right? Well, they say, chat, if the deal sounds too good, it probably is. Just call that an olive day date. Call it a day. Grab that olive day date and call it a day. That olive day date's crazy, bro. It's a fire watch. It's who you know, not what you know. I think yeah, maybe it's real, maybe it's not. Let's not judge, chat. Let's not judge. I don't want it either way, in all honesty. While we're talking lifestyle, and we should be talking about trading. We should be doing nothing because I get to decide what we do when I'm live, not you. So from 9:30, we have gone nowhere. We've gone up 9 points. That's crazy. Imagine we spent the last 30 minutes or 40 minutes talking about the market. Wow, we would have been bored. I'm sure someone somewhere caught the bottom, top, sold the top, and caught the bottom. That's not us today. The end. Is London session better or RTH better? Different horses for different horses, different courses for different horses, I guess. I'd like both, but they have a model that's adaptable for both, right? Alex, I haven't traded in like a week and a half. So yeah, I've been really risk off to be honest. You're short top of the range. We're coming for you. Oh, you just got run out. Unless you were short from 3 hours ago or 2 hours ago. What kind of beer? I'm a desperado kind of guy. I like bold beer, not anything else really. Anyway, 10 takes out at 9 a.m. Really what you want to see is we want to see it take out 6. And then you can frame something. Do I drink energy drinks or coffee? Both, to be honest. Did anyone buy the pullback on the 15-minute at the open? No, I didn't. The good old days of the high VIX and the 300 to 400 daily point range and the ES is gone. Yeah, it's unsustainable though, right? Okay, we have ES took out at 6 a.m. high, NQ failing, nice little sell-off. What would be the setup away from that area would be this. If we can get it, obviously it would need to close. And then for me, you could trade something like this maybe. Let's see where this lines up. I doubt it lines up anywhere nice. Okay, it lines up pretty nice actually. New daily low. We'll see. You need to get closure before anything can happen. We'll see. We'll see. You love the designs of Alex. Um, it's my business partner, so yeah, I've known him a while. Just hit it again. It's delicious. The entry model you have is absolutely banging, respectfully. I mean, Joel watched a video on YouTube and figured out my entry model and has been texting me non-stop the results. So appreciate you, Joel. And congratulations, bro. You did the work. What's my initial thoughts on NQ coming up near its all-time high for February? Kind of hard to fade it at this point, right? Can you see in your charts any liquidity sweep? No. There's nothing much right now, really. There's we just traded lower, traded higher. What was this noise? Oh, that's a first for me, chat. You think I bought? Nice try. It was Jim's update. It's the edge alert. Mark has been ranging for 10 days. Am I worried teaching people on my model it will blunt its edge? Not really. Someone said edging alert. You guys need to grow up a little bit. Hmm. What's my bias? Right now, up then down, down then up. Because it's always that. I don't really have a daily bias for the day. Yeah. The This indicator is It maps out a statistical level. Just think of it as like a pivot point. Up and down and up. Your edge is what? Where can you learn my strategy? Joel, where can they learn my strategy? You've got a good you learned it recently. Where can they learn it? Tell them, Joel. On your chart, would you go over why you have that specific area highlighted blue? This was just the it was the 1 minute inversion before. We were eyeing it there. No, 3 minutes, sorry. Now it's just this, right? Hear me out. Do I ever take longs? Do you ever take longs? No. No, I do take longs, of course. Of course, that's it. Collab with Lambo Raul. He's changed his name. He's Bugatti Raul now. He owns a Bugatti. Hey Shab, how are you? It's very sunny here. We missed you yesterday. Can you bring gray skies and rain for me by end of month? Strictly sun only, Shab. Sorry. How not to do anything when the markets are silly? Um, I mean, I could enter in all of these areas, right? Um, or I could just do nothing. Where is your perfect Leo? Leo had a child. Rambo, what? Mr. Boy, are you telling me a lie? Lambo Raul is not even a trader? A real trader? What? Am I up this month? I'm probably about break even this month right now, to be honest. I actually haven't checked an almighty amount. June. Yeah, first week of June was pretty good, actually. So we're up. Yeah, we're up. We're up. Scambo Raul. Crazy boys and girls. How do I know which time frame to use? Um, it depends. I align time frames to tell me which time frame to really use. Where did I learn to do your technical analysis? Um, YouTube's a good start. Kane's an ICT charter. I'm not. That would be a lie, whatever that is. Do a DCN's crypto? I do. I do. Who's my mentor? Um, who's my mentor? Don't really have a mentor. T-Trades. T-Trades is my mentor. Honestly, if you want to learn like basic strategies, T-Trades channel is always a good channel to start on. Complete education. 300, 400K views. You trade your A plus model and take 100 AQ contracts and how confident you are. Yes. How did I come up with the lab model? I really liked trading the 4 hour time frame, but I wanted to trade a lower time frame than the 4 hour. So it's like how do I get involved in the wicks of the 4 hour time frames? And then I built the model. It's Scapper SMC, Casper SMC. What's the question? Is he good? Is he good at what? We took out that London high on ES, not on NQ right now. We'll see. What was my strategy before ICT? The same. We just all use different terminologies for it now. Projections, gaps, inversions. You know. What's my plans after the trading day? Get back to doing a bit of work. Go sit in the sun. Do anything other than look at the chart. Yeah, took London high and NQ didn't. Thanks to it, Sergio. I said that already. Dang. How many hours a day do I trade? 27. And I need one A plus setup to get payouts. Good luck. Do I have beaches where I live, Lorianne? I live probably the furthest away from a beach that you can live in the UK. Will I be streaming inside the lab in July or vacation mode? A mix. I go to Saint-Tropez next weekend for a few days, and then I'm back, and then it's back to work for a little bit. And then late July, we will probably. Do I live in the woods? I live in the woods, yeah. What do I typically look for in the validation of a trade? The high. You only trade 23 days and I trade 27. Built different. That's why I'm just built different. Respect how I don't talk about crap about other traders like everyone else in this chat. Depends who we're talking about. Alex left you all, so you're all coming here now. Yeah, he just came downstairs. You caught longs? Yeah, they caught longs. Nah, trust Kane loves dodgy. T trades is better looking for sure. Maybe. The edge report. What does the edge report say? Let's have a look. Crude oil breaks sharply lower to GX1 at 7,200. Oof. The likes seem a little bit light. Julio, good point. Let's get them numbers up, chat. No more questions. Let's get them numbers up. All right. There's some rookie numbers. Very, very slow. Very, very boring. Very slow, very boring. You ever trade any other assets? I don't, Hunter. And that's an oversight on my part. So yeah, we can look at another favorite vape flavor. We're not getting into that one. Chat, don't vape. It's very bad for your health. Okay. Let's have a look at gold right now. What's gold doing? Very range bound. Who would have thought? Rangy. No longer expanding. Oil. So we gapped up on oil, rallied, and now sorry, we gapped up, gapped down, rallied, and then slowly rallying into this quite bad correction that's happening right now. The Jim kindly let us know about. So oil was down 2% on the day. Gold also having a bit of a correction. We're seeing a rally in indexes. Enki took out that high. Let's have a look at Nvidia. What's Nvidia doing? Rallying. What's Meta doing? Kind of pushing a little bit. What about Google? Or Alphabet, sorry. Not looking too sharp there. Tesla, looking pretty good. Palantir. Palantir. I would expect Palantir to do something, to be honest. What else can we look at? Amazon. Oh, Amazon's breaking out intraday highs by looks to it. Oh, show me a nicer chart looking than that. Break to the upside. Amazon all-time high in what? Maybe like a month? It's looking pretty good. Am I shorting this high? No. What do I think about trading competitions? Forces you to trade pretty bad. As we get back to close to our all-time high, do we see the return of bearish Kane? Bearish Kane hasn't left, sadly. Yeah. And I learned to trade from you, but it was always becoming gambling because I go to work when the market opens. Okay. Bearish Kane, Bane. No one cared who I was till I put on the mask. Exactly. No one cared who I was before I became Bearish Kane. 15-minute. We'll see. We'll see. Could be a nice setup coming in. Could be. Could be. Could be a nice short back to the open. If it plays, obviously everything's conditional, right? Oh, there's a flyer. We'll see. We'll see. We'll see if it plays. Wait. You are bearish, Kane. So is that like most all or all short? What? What is my opinion on Bitcoin? 70K on the table short term, strong end of the year. Bullish on the hourly. Kane, would you or would you not recommend trading to your children and why? No. I would recommend they learn, but there's their main source of income. No, go build something tangible and sell. Kane, what is that SMT indicator? There's no SMT indicator. I have no idea what you're on about. I'm sorry. Bitcoin. I think it's like we have different views on Bitcoin. I think it's a good store of value long term. I don't care if it goes up 10% a year for the next 10 years. If we outperform that, then great. I don't know, my eldest is 16. Go learn how to work, go build something, get some life experience, then I'll teach you. Yeah. I would absolutely hate for my son or daughter to become one of these city finance losers. Sorry to anybody that is a city finance. Yeah. But yeah, I just think I've not met many nice people in that world. Like, like hedge fund, but yeah. So no. I'd rather them just get social skills from elsewhere. I'm retired and like training, but honestly, I don't feel like I'm doing a damn for value to anyone doing this. Yeah, it's a very, very, very unrewarding game. Like financially, it's rewarding, but like you have no input on the world, right? Like it's not rewarding for anybody other than yourself. Yeah, it's hard. I took a hint at 50% range. It lines perfectly around 92K from a daily chart. Interesting. Did I trade multiple prop firms like 20 at a time or just focus on one? I copy traded 1 to 20, so it's just one. But you can use the money to serve people in your communities. Agreed. Um, yeah. There's nice folks and annoying folks in every industry and sector. There's plenty of friendly city mice. Yeah, that is a very, very, very fair comment, Jeff. We have the oil report at 10:30. Yeah, we do. Do I donate? Do I donate? I do donate, yeah. I do. I love trading so much. It's a job where I just make money, which is the entire reason of me to have a job. Good fit. I agree with you there. If you don't like if your job isn't rewarding for you outside of financial responsibilities, then yeah, it's a good fit, right? That's yeah. Do I do donuts? Donuts on what? Hmm. No worries. Being in a challenge account, I'm down bad, broke in a third world country. Sadly, no, I can't, because I can't buy them for you. And in all honesty, you're most likely going to fail it because that's the way the rules are set up. What's a plus for you? 5 sweep of a previous 30. Stop would be the high of that sweep candle. What's an A plus for you? A 5 sweep of a previous 30 type of candle, type of thing, or would stop be the high of the sweep of the candle? Stop would be the high of the sweep of the candle. That was really, really confusing to ask that way. How are you? What have I taken today? I'm not trading today, Sonny. I'm not. If we get this new candle here at 10:30, sweep immersion play, maybe. So 10:30 is the initial balance high, or the initial balance. So this would be the initial balance high. So we'll see. Which prop firms are the best at the moment? Would you recommend? None. I'm not doing that. Thinking the same here. The pump up will fade usually. Is there a mind program bearish? If so, how do you manage an intense short bias for yourself? What about longs? When they sell, do I take them? I kind of just take the model when it appears, right? I have a daily or a short-term mid-term bias, but it doesn't serve me intraday. I just like to. I probably side on a biased view, but like if suddenly we print a long setup to the downside and I miss the short, I'll take the long, just not for long. Yeah, rates should be maintained. Markets will take a hit. How do you know? The market may love that. Didn't take that. This is a no. This is not a trade for me. I understand why some people might take it, but it's not a trade for me. I'm curious wondering how you define trading process for the uninitiated in a few sentences. I wait for a 4 hour high and low to get taken, and I trade a mean reversion about to 50% of the range. That is pretty much it. Usually that's how markets react to Fed cuts. It's not a cut if it's maintained. So uncuts. What do we do last FOMC? Anyone know? We had no rate cut, right? And the market did what? We had we had no cut. It was maintained. The rate didn't change. And what did it do? I think it just went up slowly. It went down then up, right? Well, it must have because yeah, it did nothing. I don't think it did nothing, chat. So the market went up on the announcement of no rate cut. There we go. So the market doesn't hate the rate cut, does it? Am I looking for shorts? From here? Yeah, mainly. But like actually where is the hard part because it's just grinding and I don't like grinding. I like a nice eccentric push, then a pullback and then trade lower. Something like that. Nothing has been announced. Yeah, we know, Ahmed. We were talking about what they think the market's going to do. You're long off GC, fit check. I'm just wearing shorts and the top, bro. It's really not that interesting. It's pretty hot here. It's like lightly meshed. It's breathable. It's probably the better term. I like this. I like this now. Everyone's trading the initial balance breakout. NQ's heading for Tuesday's high. Okay, fair enough. If you say so. If you say so. Go long after the OR retest. In my first year of prop firm trading, so 2020, yeah, early 2023, I would say like the first 6 months were in the red, like just about break even. The last 6 months I was definitely up, and then 2024 I finished like it was insanely up, right? Looks too clean, might react from here. I want people to get long off the initial balance breakout and then get hurt normally. We'll see. Not actually looking, click the button. Nice game, damn, that's pretty good. Yeah, but I've been doing it a fair while, right? Like it wasn't like I just suddenly picked it up and reached some sort of profitability. Do rollover contract weeks make price action more difficult? They do. They definitely do. Not here higher. 2021 30. They're too clean. Yeah, maybe. Maybe. These up here, these highs. Sweet push. Yeah, maybe. Maybe. I will fade it though. The model tells me to fade it right here if it does. And actually, this is completely unchanged. I'm not actually going to take this chart, but if it does invert, then I would officially take it. And I would manage. I'll show you the trade, but I'm not clicking the button. But this is the model. See me Fed Watch tool has a 99% day for the current rate. Yeah, I mean, it's pretty accurate. Who's that 1%? Jeff, it's me. It's me. I am the 1%. The 0.1%. What's the trigger? Close below the blue box. Close below it. Officially, the short would trigger. So, you ready? 7, 6, 5, 4, 3, 2, 1. Okay, so now the short would have triggered. That long. This would be the trigger. He's that guy. I just like to fade, you know? There you go. We'll see. We'll see how he gets on. Can you match Leo if he convinced you to switch from a beard to a mustache? No, I will not. I'm not shaving any of my hair, not editing anything. $22 100 is the target. Maybe. Would also align with 60.075. Those are for later. I don't mind. Yeah. I mean, I'm not expecting this. Do you have any emotions while trading 130K to 1.5 mil last year? I would say like the 300K day was a pretty emotional day. And the day that it broke over 1 million, I was just like, fuck, it's a lot of money, eh? Like in a short space of time. Because it was crazy. Like I legitimately was trading, making 100K, living my life. It just felt like a bit of a dream for a while, you know? So yeah, I would say it was probably more emotional. But also it felt more emotional towards the end, which is why I withdrew it. What's the biggest day loss I've had? It's over 100 grand. Oh, this is even cleaner. That it literally took the tick. Well, why did I delete it? Yeah, that sucks. I mean, I would be out of it, but I would just retry that exact short. You know a guy trading 70 NQ minis consistently? I went from making 100 grand a year to making a 1 mil in one trade. I've never made 1 mil in one trade. I made 300K in one trade. How much of that trade was luck? Well, over a 21-day period, making turning 130 grand into 1.48 mil. I would say like, okay, sure. Was it lucky the market conditions in the model had a bunch of winners? Sure, but I was the one that clicked the button. At its peak, I was trading. Okay, so this is the next trade. Not in this, would have got stopped on this one pretty much to the tick, which would be unfortunate. Um, and then yeah, now it's starting to have some sort of run. And actually, it would just be this same target, really. We're not triggered in this yet, though. Funny MNQ didn't take that high. Yeah, it's just the way it works sometimes, isn't it? Cannot imagine putting on 70 of anything. I mean, at its peak, I would say the highest amount of NQ contracts I've traded is around 300. But this is just crazy, right? Like it's not needed. Yeah, 300 in a single trade on a funded. No, this was on my AMP account. Sorry, Ninja, but I don't use them anymore. But that was on my AMP account now. Yeah, it's a lot. It's a lot. How would I manage this trade? I'm not in it right now, but well, officially the model's not in it. Still not in it. What we're looking for now is this, right? Oh, it's unfortunate. It may miss us by a tick. Wouldn't like to think so. Does 300 end up moving the market to fill? I just I honestly pyramid okay, ticked us in. It's in now. I don't say I pyramided into the trade. I just I think I sold 50, basically 50 contract clips at different intervals. And then basically, yeah, just I'm not going to get into the broker agreement argument. I'm obviously streaming on a broker's channel right now. I personally use NinjaTrader for a personal account. This is exactly why I would be really frustrated right now if I was trading because like this immediately taking the high with ES literally creating the tick high every time would just annoy me. Um, but yeah, ultimately I would recommend NinjaTrader. Can you tell us why you changed away from the model you used to make the 100K Apex payout? The 100K Apex payout. It's the same model. I don't know about. Like the thing is, where you have to understand things about limit fills, right? Is limit fills don't move the market. You really have to understand this. Yeah, why are we yelling? Limit fills don't move the market. All it does is means that someone is spying my contracts at that point or selling me them at that point. If I want to market execute, then it can move the market. But is it moving the market, or is it just executing all of my orders to a fill price? Pick your poison. Yeah, Ninja Trader 8 is owned by Ninja. Guys, please stop using like honestly, please stop using the caps. It's really annoying to read. And it just gives off that you're being a bit rude. So please politely just uncaps your keyboard and type normally, or don't and just don't type. Yeah, I mentioned 10 a.m. reversal a lot, but not anymore. We're literally talking about 10 a.m. reversal right now. Please stop telling me what I'm doing and not doing. You're making a load of assumptions and basically telling me I'm not doing the same thing I've always done. No, you just don't know what you're talking about. The end of the conversations. Anyway, I said all of that in caps, just so you understood. I wouldn't like after two attempts at the same trade, I would kind of just wait. And obviously this is approaching 11 now. So I would just never be in this. I would wait for 11 to take 10 and go from there. Which is annoying. Yeah, I mean, look, guys, we have to understand the dynamic of the market we're in. And right now, we can accept that we are going to get a lot of chop. So for something that's fine, greatness, that's absolutely fine. But telling me something or asking me something, you're going to get a bit of a different response. You're telling me I'm not doing something. If you ask me, hey, do you still trade 10 a.m. reversal? Can you help me figure it out? It's different. Different approach gets a different answer. So yeah. Anyway, we can accept a lot of chop right now, right? Like based on the current market. And yeah, this ES, what the hell is going on up here? That's 73.75. NQ showing a bit of weakness now with this high. NQ ES still making the same high. So kind of suggestive that order flow might be shifting. I'm not an order flow trader, please don't shoot me. It might not. But from candles, I can just see some weakness here where this made a higher, now it's making lower. Kind of suggests, especially when you've got basically these highs, but these are awful, right? So what's my win rate? My win rate's around on a good month, 65, 75%. On a bad month, it's probably a sub 50. Do I still trade the 10 a.m. reversal? Every day. Look, guys, there is a really good video on the Chart Fanatics YouTube channel. Delhi, who features on here, obviously runs the show here. He will feature on there soon. Um, Go watch my video. It's the first video on that channel. I think it's the most watched video on there. Go watch it. It explains my strategy in pretty good, 65 floor view of the model by trade. Joel watched it, and now this guy DMs me every day. Like this is a killer model. So watch it, read it. If you don't, you struggle with it, then yeah, it is what it is. I'm not going to sell you on where you should go, but yeah, I run a whole community that talks through my model. You know, my average RR. Um, Again, it depends, right? It depends from a uh, my average RR I would say is around 2 to 3 ish. I don't want to say 2.5 because it's not. It's either very close to 2 or very close to 3, which probably averages out in the middle, but it's very rarely 2.5 is probably what I'm trying to say. Do I trade the London the same way? No, I trade London very differently. I expect London to expand and trade away from those lows. So I just normally just actually get in on them. If I use static risk, would you say you'd be profitable? Not really. That's my honest view. I size differently depending how I feel about the current market conditions. So yeah. You still trade the 10:30 a.m. reversal model? No. I left that one a couple of years ago. When you look at the 30 second chart. What's the fractal indicator showing? 5 or 15 minute? I believe it's the 5 right now. I do have it set to the 15 sometimes though. The 30-second. Yeah, it's the 5. I do have it set to the. Yeah, it's not this one. This one's automatic. This one's set to the 15. Yeah. But it's silly. I just don't really like this because actually, oh, I do. I do not hate it actually. We'll see. Can I provide a link to that video? You could just Google Chart Fanatics Trader Kane, or better yet, just search Trader Kane on YouTube. Hit stop at my YouTube channel, click subscribe, go over to theirs, watch the video, hit the like, and go from there. What are you laughing at? The guy's trying to annoy me. Yeah, I can't. The weather's too good here. The hoops game? No, I did watch the Formula One. McLaren. What maybe McLaren Lando Norris kind of just messed it up, didn't he? Silly boy. Wait, don't you have 200 courses and a free Lambo rebates? Sadly, chat, my entire life is funded from my trading. I know, I know. You're probably all eager to buy my course. I'm sorry, no course. You can subscribe to a Discord where you can watch me trade and learn about my model, and that's it. And it's just a monthly subscription. I'm sorry. If this fails again, I mean, I'm not actually taking it, but because I don't have the confidence that the model will play that well today. But I'm just marking the model out on the chart. I like the fact this showed weakness, right? After this. I like that. So, yeah. Who's the most attractive female trader? I am. TJR. TJR is the most attractive female trader. Oh, sorry. Anyway, that ESI is sickening. Am I in this trade? I'm not in this trade. Um, Papaya. Yeah. There is negative delta. It could help your short. Is there negative delta or is my short causing the negative delta? I will let you decide. I will let you decide that. Is negative delta a before or afterthought of my trade? I don't know. Who's the most attractive and why did you think it was Lorianne? Randy, can I just say one thing? People who have come on here and tell me I'm wrong have a track record of making themselves look like a fool. All right. I'm just saying that. Just saying. You may be the one to prove us wrong, but there's a long line before you of slain victors or slain wannabe victors. So on the left, I have 2 time frames. I use the power of 3 indicator from the 2 degrees team. Tesla's leading Mag 7. Yeah, it's kind of been like that for a minute, hasn't it? Who's the most attractive female trader? I just answered this question. How many kids do you have? 51 that I know of. I know. It's crazy. It's crazy. Genghis Khan over here. Genghis Kane. How do I turn on the bid and ask? You just put it in, it seems trading view settings here. It's more settings. Trading. I don't know. I don't know. It's somewhere, but 51 kids, you must be related to my dad. You're trying to build your track record. It's been 6 months now and I have a positive expectancy on a live account so far. What's the time I should aim for? 12 to 18 months. Or like you should really like look to scale up. But also it doesn't need to be a linear thing. Sorry, it can be a linear thing. It doesn't need to be a black and white thing. Like after 12, you scale up. Like you can just like averagely scale up as the account scales. Kind of skeptical short in this market. Yeah, we need people to be skeptical. That's just how it is, right? The trash price action made you -7% in phase two. So it's got nothing to do with you and everything to do with the really bad price action. You could have just not clicked the button. Which simple strategy do I recommend for a beginner? Um, there's no simple strategy in trading. If there was a simple strategy in trading, I'd be a trillionaire. Oh, sorry, a quadrillionaire. I'm not. I'm only a trillionaire. How long did it take me to get consistent? I've been doing this 10 years. I would say like 6 of those consistently. 4. A gogillionaire. What is that? What VWAP do I recommend for you? I'll let you in a little secret. If you pull the VWAP from the 937 high or low, you'll be amazed at what it does. Honestly, I'll show you. 937. 937. You see how we deviate ever so slightly, then we never come back to it. It's crazy. This is your one entry right here. Thing is, if you do it from this low, it's like, yeah, it looks even worse. It's not. Ignore this. This is like, this is what they want you to believe. It's this low. Honestly, it is. If you go on a 30-second, it's even cleaner. That rebar setup underneath. Oh, crazy.
Hey.
942 works well. Oh, Jim, sorry.
No, good job. But you did let loose the Kraken here with the Genghis Kane comment.
Yeah. Well, I obviously don't have 51 kids. For anyone thinks that's true, I have 0. But yeah, the chat started getting a bit out of control, Jim. So we had to bat them away with some sarcasm.
Yeah, yeah. Jason, how you doing?
Well, thank you. How are you?
Pretty good, pretty good. Happy to see you.
Yeah, you too.
So,
What?
Kane, man, thank you for doing a little bit of overtime work with me this morning. Appreciate you being here, especially after hanging out with the boys yesterday night.
No, you're welcome, mate. Anything for you. You know,
I
absolutely
appreciate that.
anything.
I appreciate that. So we're off tomorrow. We're off. I won't see you again until next week. So have a great weekend. Big plans or no?
No, if the weather's like this, then yes, do anything to stay outside, stay in the sun. But I think the clouds are coming in. Hopefully not, touch wood. But yeah, I've had a bunch of the boys in my house doing some work this past week, and they were all traveling home at the weekend. So it'd be nice to get my house back and some peace and quiet as
Are
I
they
look
done with
around
Are
at the
they
north.
done with the work?
Yeah, we've done a lot. Yeah, we've got a lot done. So
Awesome. All right. Well, I'll let you go then, because we're just going to hop right into the crowded market report with the one and only Jason Shapiro.
appreciate you guys. Catch you soon.
Thanks, Kane. Jason, how things going, man?
Yeah, pretty good, man.
All right. You're still grandfather of the year or of the century?
Stepfather.
Oh, okay. There you go.
Not grandfather yet, thank you.
Oh, Jeez. Well, we have a few markets to talk about. I mean, in general, I don't know. I mean, it's we're living in interesting times for sure with
Mm,
everything that's going on in the world.
that's for sure.
Every day seems like it's an adventure.
We sit up here all night waiting to see when the next big bomb's gonna drop, right?
Oh man. Peace and love, man. Let's just go for that.
I hear you.
Anyway, I don't know what markets you're tracking, but I was looking at silver, so I popped a silver chart up right away. I know a lot of people don't trade silver. You should trade silver. It's a great futures market, in my humble opinion. But we had this just really pretty drastic rally, making some nice highs all the way almost to $37 level. And we're almost there right now, and I was kind of matching that up to see if we were crowded yet on the COT data here. What are you thinking?
Yeah, I think we have gotten there. I think we have.
So, all right. So just to kind of recap, every large specs are super net long. Non-reportings, net long, but looks like they've been net long forever. And then the commercial or the hedgers are super net short. And when I say super relative, but those two histogram bars are getting bigger. So what's going to trigger a trade at this point, do you think?
What's been driving silver higher? That's the question. Figure out what's been driving it higher, and therefore, if that continues and silver cannot drive higher on that, then that would trigger a short trade for me. So you look at things like it's been very correlated to platinum, which has been ripping as well. Platinum's up over 3% today, silver's down. So a down close on silver today most likely triggers a short trade for me with a stop against today's high.
Okay. That sounds like a trade. Yeah, that's awesome. Yeah, platinum's on my list. We'll get to that in a second, right here. Tracy talks a lot about it, about silver as well, and I think in a nutshell, there's some supply issues here on a macro front. So, um, nice move up. Let's look at platinum while you mentioned it, because that was on my list, believe it or not.
Hasn't
Wow, look at that.
reached the max long level. They've clearly been getting long as the market has been ripping higher, but you can see it was more crowded back in May. So
So hang on a
crowded
second.
back in May, it pulled back. The crowdedness got out right there at the beginning of January, and it's more or less gone up ever since. And it's working its way, I think, towards getting very crowded, but it isn't quite there yet. And it may never get there, but you don't get them in all the markets all the time, but you got them in one right now, which is silver. So that would be the one I would be focusing on. And as I always say to people, in particular, if you're like trend follower, which is what more people are, don't necessarily have to try and short silver here, but I would be looking to at least either get out or reduce based on this.
Okay, so let's sticking with platinum for a second though. Let's go back to November of last year where we had pretty big large spec histogram bar max out. And then we I guess what we'd expect, right? The market did sell off. It wasn't a huge sell off, but it did sell off pretty much right at that point.
Right.
So just to kind of compare levels, we're not quite to that peak high that we saw. Let me toggle back to silver though, really quick, and look at just kind of look back in time to see if there's anything that sticks out.
Yeah, I mean, the only time it really got this high was, yeah, right there in October. And then again, arguably in in March.
Yeah. Well, yeah. So back in October, we had it was a few weeks of sell off here, and then we went sideways for a long period of time. So That was an awesome signal. So we'll see what happens this time. I mean, we're really elevated prices here, so I'm just not used to silver being in a 30 handle period, let alone, driving toward 40 or 37 or whatever we're at right now. It's a unique experience to me, even though I've been involved in this forever. And I've seen it happen a couple times, but usually it doesn't last. It's not sticky. You get that pull back down.
Yeah, well, according to the positioning, we're it's a pretty good probability of it happening pretty soon.
All right, all right. So I'm going to circle silver on my cheat sheet here. It's something to think about. Last time I think we talked about, if I remember, the ultra 10-year note. I want to kind of just toggle over to that market as well because we've got some, this is an opposite picture. So the large specs now are pretty massively negative, net negative. The commercials are net positive. Non-reporting, I don't know if they're a factor on this look and feel, but what do you make of this?
Yeah, I mean there are areas in the fixed income market where people have gotten very short. This is one of them. The 5-year notes are the other one. Um, we have the issue in these fixed income market positioning charts that there's obviously big basis trade stuff going on, and that's affecting this, you know, and we don't know exactly how much of it is that and how much of it is sort of normal speculation. So it's a little bit hard, but certainly, no matter how you measure it, speculators have gotten pretty darn short fixed income here.
Yeah, I don't know what to make of this. I mean, I am my personal bias. I just set aside commitment to traders for a second, just looking at the yield curve and the treasuries and the relationship with the treasuries and the equity markets historically versus what we've seen lately. Um, I feel like there is some potential for at least this part of the curve to make some upside moves. I don't know. So I don't know if that's consistent with the trade idea here or not.
It sounds like it.
Yeah,
Excuse me.
that's all right. So, and by the way, folks, if you haven't traded, this is another one of the treasury instruments, right? So if we talk about financials, there's the historic 10-year note that's ZN. And then they recently issued these ultras, which are more of a true 10-year duration basket of treasuries, and that's what we're looking at right now is that longer term. Let me see. I don't know if I even have a 5-year up here. I don't. Why don't I do that? Let's say I'm going to add one, I think. Um, ZT is the 2-year. ZF, I believe, would be the 5-year. Let's go ahead and just add that to my list here and take a peek. I didn't look at this today. Let's let the COT data percolate. Oh, wow. So
Yeah,
this is,
that's the one where they're really short. But again, is it how much of that is being affected by the basis trade diet? I cannot say because I don't know.
okay. So in your mind, you would be a little bit more hesitant because of that to take the trade.
Yeah, I mean, no matter what number it is in the basis trade, we still are showing some, very large shorts one way or the other. At some number, the basis trade you can cut out, we're still at record shorts there. So um, I am not trading it, but that's definitely what the story is.
Yeah, got it. I'm just kind of go back in time a little bit. Yeah, it does. Is this all-time record or is
Yeah, but again, that's because again, you look at how big the basis trade has been over the last couple of years, and that's what I believe is building that all-time record, which makes it
yeah.
a bit less valuable, I think. But
Yeah, let me make sure I have my settings right here really quickly. Sorry for this. I toggled back to this. I added this to my new chart book. Um, uh, just in case I don't have there. There we go. I added the final piece of the puzzle there. So we got back-to-back COTs with these elevated levels. That's the 5-year U.S. Treasury notes. What other any other markets that are on your radar screen right now?
Wheat.
Wheat. That's a curveball. Let's get that going. There's a pretty big green weekly candle here. Let me get that positioned. All right, what are you seeing here?
So you can see back mid-May,
Yeah.
we had that, they're really hitting some very, very large short positions there. And now, as it starts to move up, those short positions, and this is the whole theory of positioning and all that. Once it starts to move up now, and they're all sitting there so short, well, they've got to start chasing it back up, right? They got to start getting stopped out and whatever they're going to do. And there's a lot of that that has to happen because of the amount of shorts that were out there. That's what this is really all about. It doesn't really, I don't really think that this stuff is the best predictor in the world, but it ends up being a great risk reward thing because, hey, they're super short. That doesn't mean it's going to start going up. It just means that if it does start going up, there's potential for a very large move the other way. And we're starting to see the beginnings of that.
Yeah, the beginnings of it. Yeah. I mean, this is pretty big. We saw it right away almost, right? So this is May 23rd. Big green pop up, little sideways action, and another pop up, little pullback, and then this week, so far anyway, a super duper rally here for whatever reason. I don't know what the fundamentals are for wheat today, but that's a pretty big move up.
Yeah. Yeah. Well, like I say, when these guys get caught short and they got to start running for cover, that's where you can get these big moves.
So at what point do you think, what do you look for when this move is exhausted? Is there anything to look for when it's exhausted, or is it just I have a target in mind and I'm going to get out when I get out?
The way that I personally do it, if the edge is, hey, people are super short, so I'm going to get long, then when I get out is when they are no longer super short. So when this stuff kind of goes back to neutral, um, that's when I'll take my profit. I think that what has been shown by my testing and all that is the largest P&L you get on this stuff is if you wait the entire time for it to get crowded completely the other way. Um, but for the purposes of my trading and for what I'm doing and for what I'm providing, I get out at neutral because at that point it means the trend followers are getting in, and that's kind of their job, to trend follow this stuff. That's not what I do. I counter trend it. I catch these turns, and then once the turn happens, I get out, and then the trend followers take over and they do what they have to do, right? That's the service that I kind of provide to my clients, this negative correlation type of thing. They have trend followers in their portfolio that do the rest of it for them. This is what I do. So for me, I get out when it's neutral. I also find that after it's gone neutral, if it's to continue in that way, the volatility goes up a lot more. So that kind of, hurts my return to risk ratio and all that. So I play the area that I play and others play the area that they play.
So we talked about this before, but there's new folks in the chat. So let me ask these two questions again. At what point do you decide that we're close enough to neutral?
I I create an index for this stuff. Um, and when the, let's say, commercial index is 95 or above, that's where I'm looking to get long. When it goes back to 50, neutral, I'm out.
Got it. Okay. So 50 index point, boom, that's it. Now, let me ask you this. As this thing rallies, after you put on your initial position, will you add to that position if it's going your way and you're comfortable with the future?
I don't do that. No, it's not my trading style. I put it all on in one day. Um, like I say, if silver would close down today, I get short silver versus today's high. I position size based on how much I am willing to risk to that stop. And then that's it. It either gets stopped and I risk what I thought I would risk, or it works and I get out when the stuff goes neutral. I don't add or pyramid or any of that. That changes the risk profile of the trades and all that, and that's not what I'm looking to do.
Yeah, I gotcha. All right, let's move on to another one on my radar screen. I want to get your opinion on this one. I love this market. This is heating oil, also known as ultra low sulfur diesel, which pretty much powers our supply chain from shipping to uh, trains to long haul. And one of the things I noticed, I wanted to ask you about, is a flip flop, right? We were last 2 weeks ago, we were neutral on the commercials, right? And now we get a couple of decent negative prints, right, on the commercials. And then the specs, yeah, it didn't have, they were short, and then now they're long. So there's a crossover of the zero line, if you want to put it that way. Um, is this a sign of is this a signal to start paying attention to this?
I think heating oil is starting to approach a place. It's not really there yet. I mean, it's not a big surprise that speculators have been buying into this as the market has been going up. That's typically what happens, right? They buy what's going up and they sell what's going down. Not always, but typically. And so that's not really a big surprise that that's what's going on. It hasn't really reached a level, I think, of maximum positioning yet, but it is approaching there. That is certainly where um, speculators have gotten the most long in the energy space, as compared to crude or unleaded or anything. But yeah, it's approaching, but it's not there, so nothing for me to do.
I got it. Yeah, I mean, I'm just going to throw my crosshairs out here and just kind of look at some of these bigger bars that we saw in February. I'm not quite there yet. We could probably go back in time a little bit as well. This was July. Wow, this would have been a good signal here. July last year, we had um, the hedgers short. What is that? 34,000, 35. Well, just rounded to 35,000 contracts. And then if you look at the chart, sure enough, that was peak high, and then boom, huge sell off.
Yeah, that's how we like to see it work.
Yeah. Okay. So we need basically what I'm hoping to happen here is we need some bigger orange histogram bars to the downside as this is rallying up again, and then think about the fundamentals of why this is doing this, and then maybe pull the trigger and get short.
It's the general idea, yes.
Yeah, I like it. All right. Well, I saw this one this morning. I got excited about it. I don't know why.
Whatever floats your boat, man.
I know. I know. Now, that's the thing about these futures markets. There's just so many of them, and all the asset classes are covered. Many of them are liquid. I mean, they're tradable, right? You can get in a position, hold it, and the transparent order book does its thing, and there's global participants in these things. So there's a lot of opportunities from a position swing day trade point of view on these markets, and sometimes people don't think about some of these really unique markets, which are really great, like this one.
Yeah, I mean, it all depends on what you're trying to do and how you want to do it, obviously. For me, I trade one process. So I try to trade that one process across as many markets as possible. I always say it's like I'm monitoring the blackjack tables for which table gets a high card count. If you sit at one table and wait, you could be waiting forever, right? If you monitor 20 tables, one of them will get that high card count, and that's where you want to go and play. So, yeah, that's how it works for me. If I'm trading one process, if you're just day trading S&Ps, then it doesn't make a difference to you, right? But if you're trading a process across futures markets, clearly the more markets you can look at, the better.
I got to think of that strategy next time in Las Vegas. I like to sit at a crowded table so I could talk to the people. That's my strategy of picking a table.
Yeah, you're not gonna count cards in Vegas anyway, because if you do, they're gonna kick you out. So
Oh yeah,
you're gonna break your thumbs.
that's beyond my pay grade anyway, especially after the first cocktail. So
Yeah, that's right. I mean, it's really what it's for, just sitting there and passing the time, entertainment.
yeah, you meet some great people that way. Let's kind of shoot over to Euro FX. Yeah, I'm a super fan of this market. I used to pedal Forex back in the day, over the counter, and this is also kind of piquing my interest here. Let me open this up a little bit better, Jim. There we go. Now now I'm thinking crowded, right? Whenever I look at these COT reports, I'm thinking of you. I'm thinking of your strategy, and we've got some pretty negative commercial positioning right now, and some positive large specs.
Hmm.
Ready for a short trade here or no?
In the stock market?
No, 6E. This is the
Oh, in
Euro
the
FX.
euro.
Yeah.
Yeah, I mean, the yen is the most crowded there, and euro also, yes. I think, sorry, I said the stock market. That's a chart I'm seeing up on the screen there. I don't know what happened. I'm not seeing your COT charts on here right now. Don't know
Uh,
why. No, I'm seeing, uh-huh. Okay. I see. Yeah, I was on the wrong thing. Yes, the euro. So let's talk about the euro. Um, Crowded for sure. We know that the short dollar trade is way popular here, right? We don't even need COT to know that, right? It's all everybody talks about is short dollars. So when to get in on it? Well, now, you know, yesterday we had news that I would argue was bearish dollar, and the dollar went up on it. So there's your sort of news failure slash market confirmation on that. So I feel as though being short the euro versus yesterday's high would be the trade there.
okay. All right. All right. I'm getting it. Yeah. I mean, this is looking, we've last time we saw this kind of level was back in January last year, I think. If I go back in time. Yeah. Or maybe even before that, December 2023. We had that exaggerated level, but this has been building, building, building nicely ever since March. And eventually I don't know. I mean, currency pairs are a weird thing in my lifetime. They always kind of revert back to a level that you've seen before. So I wouldn't be surprised if this sells off.
I wouldn't either. Although nothing surprises me anymore. So
What do you mean? It's funny you should say that. If we would, I was thinking the other day, 20 years ago, let's pretend we're 20 years ago, and we have the same news cycle we have today. It would freak everybody out. And now we're kind of shrug our shoulders at a lot of this stuff. I mean, I think the mentality's changed a little bit in 20 years.
a little bit. I think that there's a function that's a function somewhat of the fact that if you look at the numbers of what the markets have done since, say, Russia-Ukraine broke out, you know,
Yeah.
the markets have gone straight up
Yeah.
and oil went down, right? If you look at them since the first time Israel and Iran were bombing each other, which I think was last fall, um, stock market's gone up, right? So I think people have now been sort of programmed to believe that it doesn't matter, right, anymore. So it doesn't even bother going down anymore on that news, right? That's my gut feel for what's going on there. Um, I just kind of feel like we're in a bull market in the stock market. So, bull markets have a tendency to fight off bad news and do very well on good news. That's what a bull market really is, right?
Yeah.
So still think that the stock market acts very bullishly, and clearly that could change at any moment. But for now, and what I've been saying for a while here is the stock market is we're in a bull phase right now, and that's why I think it shakes off this news. But you're right. That's the whole point. What if this news happened then? The markets would be crashing. Well, why aren't the markets crashing? Well, maybe they're giving us a signal that it's because they're going up.
Yeah, so that's a good way to look at it. It's, even in an environment where, you go back to your, at least for me, my old man bias, and the opposite's happening. At a certain point, you got to say, all right, this is what this market wants to do, this is what it's going to do. So maybe discount some of the bad news. I don't know.
Yeah, I mean, I don't know either. But at the end of the day, the market is either giving you, if you want to, go short or you want to sell your stock, it's giving you a gift to do so here, right? We're still at 6,000 on the S&P, you know. You can get out of all your stocks or go short or whatever you want to do at a very, very, very good level here. You know, we're not very far from all-time highs, right?
Yeah.
So it's giving you a gift to be able to do that. So the question I ask is, does the market really give gifts? And the answer, of course, is sometimes, but not very often, right? So you're really fighting the tape if that's what you're doing. And look, maybe you can do so and you could do so to your benefit. But over time, which is what this game has to be about, that tends to not be the best idea.
Yeah, I've never gotten a gift. I've gotten a poke in the eye on occasion,
Yeah.
but not a gift. All right, well, let's look now that you bring it up. Let's talk about the mini S&P. I have it up on the screen right now. It's an interesting kind of look and feel here. We have a couple things to talk about. We have the large specs, last print, short 127,000 contracts, matching the week before and matching 5 weeks ago on May 8th. So, but no real huge trend, right? A little bit to think about and to consider. On the other side of the dividing line, we have the commercials long 58,000, probably not a huge number. And then we have the non-reporting. This is the first time the non-reporting is coming into play for me. Non-reporting is up to 68,000 right now on the long side. So, right away, I'm suspect again. My old man bias is saying, all right, maybe we are. I'm going to start thinking about sooner than later getting shorter.
I don't know why, but I mean, you look at the small specs, sure, they're a little long, but look where they've been a hell of a lot longer before, right?
Yeah.
The commercials are net long and the large specs are net short as the market is approaching all-time highs. Think about it relative to where the market is, right? These guys should be a lot longer, I think, relative to where the market is, if you ask me.
So follow that through, then we expect these blue histogram bars to get bigger, more negative as we go forward.
Well, I don't know. The market keeps going up, then I would expect them to start going up, right? So I would expect them to cave in and start chasing the market higher. Don't know if they will. They haven't to this point. They've done really nothing but sell into this rally. You can see where they were on the lows back in April. And they've really done nothing but sell into this rally, which is not something that we see a lot. It is something we see once in a while. But until they give it up and chase it higher, I wouldn't be looking to short. Just me.
Yeah.
Just me and my process.
Yeah, no, I'm with you. I'm with you. Yeah, no, I agree. We're in a bull market. I don't think there's any doubt about it. I mean,
Yeah.
just regular technical analysis is, moving averages are all moving up. We're getting higher highs every time we blink. Yeah, there's a little bit of market dislocation temporarily, but a couple tweets later, we're back.
Right. And I find that if you can establish the fact that we're in a bull market, then you probably want to err to the long side, you know.
Yeah.
Um, a lot of lucky things happen when you're along a bull market. And you have to define what is a bull market and all that, but if you establish that we are in a bull market, then clearly erring to the long side is the place to be. And once that ends, the bull market phase kind of ends, then you can start thinking about going the other way. But to me, in my view, how I see things, we are still in a bull market here. So I would prefer to err to the long side.
Yeah. I'm with you, man. All right. I hear you. We have a minute left. Let's just pop up gold. We haven't talked about gold yet, have we? Let's see what that looks like. Nothing to see here, kids.
Nope.
Yeah, nothing to see here from a COT point of view. Kind of sticky up here around 3,400 again. Um, Historically high, but I'm not writing
Not
history.
as high as it should be. Another one. Look at they've been selling this thing since January, right? The Blues have been selling this thing since January, selling into the rally. I don't know why that is. I don't know why they would be doing that. Certainly a trend follower wouldn't be selling that. I don't know why a fundamental trader would be selling that. Arguably, the fundamentals for gold have gotten nothing but better. Um, so why are they selling into that? I just can't. I just have no idea why they would be doing that. But the bottom line is, it doesn't matter. That is what they are doing. So
Yeah, awesome,
that
man.
can help to sustain the move up. So the question becomes, if silver is so crowded and gold's not, maybe the way you do it is you look to be long gold, short silver at some point.
There you go. Intermarket spread. I love it. Well, Jason, I missed you last week. I'm glad I'm back. I'm glad you're back. Looking forward to talking to you again next week. Appreciate your time today.
Yep.
We'll get Mission Control to cut and paste your X handle into the chat. Appreciate you, man.
All right. Have a good week.
All right, all right.
Thanks.
All right, up next, folks. Up next, we have a guest. And when history writes itself 10 years from now, you're going to remember Jim Dalton, John Murphy. You're going to remember Steve Nissan, and you are also going to remember Brian Shannon. Brian, how are you?
Well, thank you. That's a heck of an introduction.
You deserve it, man. I mean, the stuff you put out there is great, and I appreciated last year you sent me your book. I digested that like crazy. It's awesome. By the way, I recommend it everybody. Alpha Trends is the X handle for you. But how you been?
I'm doing good. We've got volatility here in this market. It keeps us interested each day, right? I mean, it's one headline after another, and as you and Jason were just discussing, the market is climbing a wall of worry. It's going up on so-called bad news.
It's amazing how resilient. I mean, I've been talking about this all week, how resilient the equity market is. I mean, it's not even kind of bad news. It's like really freaking bad news. And it just keeps roaring.
It's amazing. Yeah, it's why my mantra is only price pays, because I have for previously spent years and years of my life trying to assign reason to the market, and well, this is bad news, so it should go down. I got to exit my stocks. Maybe I should start selling short, but the market goes higher, and you can't argue with the market. You can't argue with the market, but it's going to be a very expensive argument, and I got tired of those arguments, so I just defer to price action and try to create a good plan around price action. Be aware of what the news is. Be aware,
Yeah.
obviously, of the catalyst coming, like the Fed this afternoon. I think the market's slowing down ahead of that right now after a nice morning run. But it keeps you on your toes, and it's why you have to have a strategy and a disciplined approach to that strategy.
Yeah, absolutely. I'm with you on that. I know you do a lot of like individual equity analysis as well as the future stuff, which is great, which I follow all the time and appreciate that. Any like hot market in mind right now that you're looking at in the futures markets?
When it goes to the futures, I really only look at the AES and the NQ. I'm not a futures trader, so I look at those, and it's not my primary thing to look at. I would rather look at the SPY and the Qs, but I think that there's certain days you have to look at both, even if you're an equity trader, and that is most particularly when we have a large overnight range, that you're going to see a big difference between the VWAP from the overnight and the 9:30 a.m. New York open. So, this morning we were, kind of, well, we have, so let me just make this S&P on top, or ES on top, NQ on the bottom. And this is, what is this, a 10-minute time frame. So what I have on here is the blue is the anchor, the volume weighted average price from the beginning of the week. That's Sunday at 6 p.m. my time, or 4 p.m. my time rather. And the red is the high of the week, and the green is the 4 p.m. yes or 6 p.m. yesterday, and black is the NYSE open. So when we look at on this 10-minute time frame, it doesn't really look that different. But if we go down to, let's say, a 2-minute time frame on both of these, what we see is, we started out the New York session on some weakness. It got back above the New York VWAP and then reclaimed the overnight VWAP. And that's when this market really took off. Now we're fighting with the week to date and the anchor from the high in both of these markets for the week. So I think we kind of probably settled down right now in these markets into, maybe even we pull back down to the the overnight VWAP, undercut the NYSE one. So a lot of times when we have a difference between them, a lot of times when we don't have much range overnight, you'll see that the NYSE kind of starts to really track along with the overnight VWAP. But because we had some range and some volume, that there is a spread between there. And what we often see is, the Q's traders, the QQQ traders will look at it and they'll see that it gets stuck below the VWAP for maybe 10, 15 minutes. And they'll think, hey, well, this is a great short. So they'll short it. And then maybe it comes down to this anchor and bounces significantly. And if you're not looking at both of them, you're missing that piece of information. And even for, futures traders, I think you always should have not only your anchor from the beginning of the new session, but from the 9:30 a.m. as well, because you're going to see sometime, and people are like, well, which one's more important? And it just depends upon the day. It's not that one's more important than the other. It's just some days it will nail, and look at the pullback. It came right down, and those were right in the same spot at that time. But now we have more volume in the Qs than we did in the New York session. So it's tracking a little bit more carefully. But these pullbacks, once we get above those VWAPs and then we pull back, I never want to buy on the pullback. I don't want to buy the dip. I want to buy strength right after on this bar and then anticipate that it's going to run up to here. And then I start to use strategies like, okay, if that's my objective, not necessarily my target, but that's my upside level of interest, I'll look at that and I'll say either I'm going to sell some or I'm going to use a 2-minute stop and put my stop underneath the, let me just delete all these so we can see it a little bit more clearly. So as we get up there, I will start to put my stop, for a day trade underneath the 2-minute bar. So as it goes, and then if it makes a 2-minute low right there, that's where I'll sell at least part of it. If I'm looking at it as a day trade, if I think, hey, this is a swing trade that can continue, then I will, look at it that way. But then again, we've got to look at the bigger picture. And the bigger picture, if I can switch screens, I know you guys like to look at the futures, but so when I look at the bigger picture on TradingView, which is what these charts are, we had a new contract and the chart gets all messed up basically. So I don't like to look at, around that rollover time, I don't like to look at that. So what I'll do is I'm going to switch real quickly. If I can find, there it is, stop share. And where'd my share screen go? What am I looking for? This. So this is here. This is the S&P 500, the SPY. The Q's right here in the upper right. Bottom left is the SMH, the semiconductors. Bottom right is the IWM. So what I look at here, Jim, is, and we've discussed this, one of my main intermediate term trend indicators is this orange line. That's the 5-day moving average. And when people look at this, I'm looking at a 30-minute time frame. So they'll look at the moving average and it'll say 65 periods. So I know that you know this, but I'm just refreshing for your audience that a true 5-day moving average isn't found on a daily time frame until the close. So what this does is it says a true 5 days was right here. This bar you can see was, this was on Wednesday the 11th at 12:30. Well, here we are this Wednesday at 12:30 or 11:30 rather. Anyways, so this is a full trailing 5 days, no matter what time of day it is. If we were looking at a daily chart, we would have a four days plus 2 hours right now. So it's not 5 days yet. So anyways, the math means that there are, 390 minutes in the equities market per day, 1,950 minutes for 5 days. So a 30-minute chart, there are 65 of those periods in 1,950. So we always want to, say 1,950 divided by the time frame. If the time frame was 65, then we'll be using a 30 period moving average. And what I look at here is, Jim, we've seen, just some pretty good choppiness the last really, 3 weeks, 2.5 weeks. We're kind of stuck in this range. Here's basically our midpoint. We've run up to that. That's the anchor from the high of the recovery, not the year-to-date high, but the recovery from the April 7th low. This is the week-to-date volume-weighted average price, is the black one, and we rallied right into. So, thinking back to the futures and trading those on a short-term basis, you want to be aware of where do we have the potential to go, and that's right there at that 5-day moving average. It often acts as resistance when it's rolling over, especially, we expended a lot of energy before a Federal Reserve meeting. Now the market kind of waits. We see some misdirection here and there. So now the question is, what happens after the Fed, right? So we've got this level. If we get back above it, and this has been right in here, an important level. So if we get above that and hold above it today, well, then that paves the way for continued upside and most likely a new all-time high in the SPY. Same is true for the NASDAQ. And so for the NASDAQ, the Qs, we've got these. And what I actually should be doing, I apologize for that, just make this a little bit easier to view. So that's where we are right now. Now we're kind of just biding time is the way I look at it. And the blue is the month-to-date anchor. The purple is off the May 23rd low. So those become levels of interest on the downside. Let's say we sell off strong on the Fed. Well, that 526 and this 596, 595, 596, where we've seen prior tests, those become levels where I'll say, okay, if we sell off there quickly, maybe this is where we're going to bounce from. I wouldn't look to sell short down there because it would be too far extended. So let me slow down because I've just gone through a lot there, and I'm not sure what we're looking here to do here today.
No, that's okay. You just gave us a couple of gold nuggets here that I know we did two things in a row, but I think it's okay, and I do it all the time, and I know a lot of the folks that we talk to have an SPX chart and a QQQ chart, and kind of do the math during the roll. That happens all the time, and that's a good thing to do for sure. And so when you're thinking about the roll, because you have continuous charts, you have non-contiguous charts, you have the pure charts, it gets a little murky at roll time, especially this week where you got roll, you got OPEX, and you got a Fed meeting, and you got a holiday all wrapped up in like 3 days. So this is not a contract. This is a continuous market. So it's a good way to look at it. So
Yeah, and I don't mean to interrupt you, but I was going to point out that the same thing actually happens to the SPY and the Q chart when they go ex-dividend, because they'll drop $2.60 or whatever the dividend is per quarter on the SPY. It'll drop by that much. And then I'll look at my 30-minute chart and go, this chart's all messed up. So then I'll put more attention into the 30-minute chart of the futures, because that one has shown that steady deterioration of the premium versus all at once with the dividend.
Right. So let's go back to the futures for a second.
Yep.
The VWAPs that you're anchoring, you started from the Globex session on Sunday, the open.
Yes.
And then you added.
Where did that chart go? Sorry, go ahead. I'm with you.
That's okay. I'm just trying, because this is where the gold is in my mind. So that was kind of VWAP number one. VWAP number two was the daily VWAP, right? The session VWAP.
Yep.
And then number three was the regular trading hour VWAP. Are those the three ones that you had up there?
let's take a look here. Yeah. So I had the week to date right here,
Week to date.
anchor from the contract high, from the
Okay.
week to date high. The most recent relevant high basically is what we're looking at there for the week. And those, as they, they've kind of converged, so they're in the same spot. Realistically, I could probably just get rid of that red one just to keep the chart clean because it's in the same place as the week to date. And
Yeah.
I think that's probably a little bit more because it encompasses, what's going on for the week. And then yes, this is the overnight session. So we gapped lower a little bit at the open. And then the 930 is where we are now. And if you really want to get nitty gritty and, really super scalper day trade, you could put an anchor off of the peak of the high of the day and say, how do we respond to that? And basically the 930 was the low of the day, so it wouldn't matter in there. But that's how aggressive do you want to be? So right now the futures, people would be looking at the futures saying, well, it's nowhere near the VWAP. The VWAP's down at 54. Here we are at 58. Why are we bouncing at 58, 59? There's nothing here if you're just looking at the futures. But if you're looking at the 930 open, we're trying to stabilize right here, right now. Now, I don't think that means there's a trade because we've got the week to date anchor just overhead. We've got probably a quiet market going into the Fed here. So, the market's probably going to go to sleep for a little bit.
So this is going to be my oscillator brain work right here. When the shorter the shorter duration VWAP crosses above the longer duration VWAP, is that a signal among itself or no?
It hasn't been for me. I don't do, similar to moving average crossovers. I think they're horrible in terms of signals. I mean, look at, everyone was talking about the death cross in the S&P 500, 15% ago or whatever it was. We rallied, maybe 12, 15% from the death cross. And, from the time we were, so moving average crossovers represent indecision.
Yeah.
They say, okay, let's say that the 10-day moving average crosses above the 50-day moving average. Well, it means the shorter term time frame is higher, but the 50-day average is lower. We've got mixed messages from different time frames. So, or even the 50 and the 200, it doesn't tell you anything other than we have mixed messages from different time frame participants. So to me, it's more about take action, take a look at shorter term timeframes to see what's really going on under the surface. So a VWAP crossover, I think that it's more about price action where it is in relation to the VWAP from the 930. And did I just draw another one? I did. That's because I meant to do this. So, is this crossover right here where you should have purchased? Yeah. No, you should have purchased right here where it made that little higher high above the volume weighted average price. Then you also had, SPY traders looking at it as an opening range breakout trade or just a high of the day trade. So, and a defined risk below the low of this session right here. That was tied quickly. So that was a real defined risk reward with your potential to go up to the week to date volume weighted average price.
Yeah, no, I gotcha. And we have a lot of traders over the years that I've talked to that say, you know what, I only care about regular trading hours, tick and trend, whatever happened overnight in Globex, I don't care about. And that's not my philosophy at all.
Mhm.
I love to see the overnight action. But when you anchor a VWAP from RTH, which I do, a lot of people do,
Mhm.
I think you got to add that extra element into it to see where it is in relationship to the other VWAPs.
Yeah, and it depends on your time frame, right? I mean, if you're a scalper, then absolutely you need to do that, and you probably should have an anchor off the high of the day at this point to see if it runs up to that and starts to come back. But it's less important because now that's where we have the week to date anchor, and you can see how yesterday afternoon we came right up to the week to date anchor and then just caved in. So when you combine the different time frames and realize, it's all part of the bigger picture where we're approaching that all-time high, you don't want to get too aggressive on a short sale. So you're going to sell short on the shorter term time frames, and expect them most likely to be day trades, if you're a day trader.
Yeah, no, that totally makes sense. And yeah, no, I use them all the time. So let me ask you this though. So you right now you're anchoring the top of the trend in a downward environment, would you do the same thing on the bottom of a trend?
Yes, always. Yeah. So if I was looking at this market and saying, my bias is short and I'm looking to get short this market, what would make me want to get short this market? Let's see if I do this right. Now, how do I stop that from happening? Um, I'm not the best user of this tool here on, what I'm trying to do is, let's see if I can do it this way.
This is above my pay grade. I don't.
Yeah, what I'm trying to do is move the chart to the left so I have some blank space on the right to draw on. And I don't remember how you do
This
that.
is where we need the chat. Chat.
Um,
We're phoning a friend, guys. This trading view charts up here. How do you just
Trading
kind of
candle.
joggle
What did I
over?
do there? Uh-oh. Let
Uh-oh.
me just get rid of that. Maybe that. No, it's
Click.
stuck on this
Andrew
tool.
Andrew says click and drag. Wait, and then Michael's saying
No.
hit escape twice. Are you guys telling us the truth here?
Oh, there. Escape twice hit it. Thank you.
All right.
So if I was looking to short this market, I would say, this anchor off the peak, I would want to see it do this, maybe come down to the anchor from the overnight session,
Mm.
then kind of get trapped below this anchor off the peak, maybe, bounce between the 930 and the overnight. And then I would want to be probably shorting right here because now the average participant from the overnight, which was basically the same thing as the low, is now in a losing position. So this is a lower risk entry here with a stop above the most recent relevant lower high for my time frame, which might be over here. And then I would look for it and say, okay, well, if it comes down to this level really quickly, I would probably cover a piece of it here because it would be extended. You'd get the late shorts there, you'd hit those stops under there. Then it would probably do this and then continue down and probably do the same thing here. And I might even add back a little bit here. And what I would do at this point, Jim, if we got a bounce here, I would add a new VWAP from that low. And as it breaks, it would tell me I don't want to short on this rally because the buyers from that low are in control. But once the buyers start to lose control from that bounce point and it breaks below there, now I know that the average of all these longs is now losing. The average of all the shorts in there is winning. So now they're winning from the overnight position, from the low of the day position. So that's where the sellers regain control. We know that with 100% confidence. It doesn't mean they're going to maintain control, but that's where it's a fact that the average bounce buyer, the volume weighted average price is lower, is higher than the price right now, meaning the average participant here is now losing money. So what happens when people lose money? Well, that's when they start to liquidate, or that's when shorts start to say, let's press on this because now we're back in control.
Yeah, that makes total sense. So you did mention earlier this idea of confirmation candle. Talk a little bit about that.
Okay, yeah. I was just confused because you said candle, and
I'm sorry,
I look at
confirmation
bars.
price
Yeah,
or bar or
bar.
whatever.
Yeah. So if we just go back, get rid of some of this, so it's not quite so messy. So actually, let's do this. Let's say, let's say I was looking at it and I was looking over here at the VWAP off of this low. So I would say, okay, did it come down too quickly or did it rally up and then break down? So I don't want to short, for instance, the touch of that VWAP. And if these were bars, they might look like this. So I would instead say, I want to short as the sellers regain control, not just the touch, but as it moves back from there. So it breaks below the VWAP. I don't want to short it yet. It touches the VWAP. I don't want to short it. But as it breaks down, that to me says, okay, the sellers had their chance, or the buyers had their chance to push it back up through the VWAP from that low. They didn't do it. The sellers defended it. Now I look at it and say, I want to short right over here. And if I really want a really tight stop above this high, if I want to give it a little bit more room, then up here, maybe I'll put my stop on the add. So this would be the add. I would put my stop here. But if I'm still holding some from over here, then my stop on that would be above this level. So I would be managing the risk in, with this is my new position. I don't want to give it much room because it might reverse, or it might come back up to the anchor from the overnight, which is way up here close to my entry. And I don't want to give that much stop. Instead, I'll risk just a little bit, and I'm still in a comfortable position on this. I've covered some down here, and now I can kind of let it wiggle a little bit.
Got it. Makes sense. Michael Dominguez says his first book was a game changer for me. Thank you, Michael. We appreciate that. We did,
Meta Mike.
Yeah, we cut and paste the X handle in the chat, everybody. It was a great follow. Even somebody even said, Brent says his X subscription. I've been talking for a while today. X subscription is 100% worth it. There you go. Very
Awesome.
Yeah. So in any event, back to business. You showed us a 2-minute time frame before for intraday for day trades. Do you have a favorite time frame or just whatever?
For day trades, it's probably a 2-minute chart. For the first 15 minutes of the day, I think you've got to look at a 1-minute chart. There was a time during the initial Trump, tariff stuff, I was trading on a 15-second chart because it was just so damn volatile. I mean, we were seeing, 10 S&P points in 30-second bars. So, you can't manage risk on a 1-minute chart when you've got, 15 handles in the range. But generally, I'm not looking to be a day trader. In fact, I'll do it on a day like today where I look at the market and say, we're against these 5-day moving averages. It doesn't seem likely that we're going to change direction in a big way yet. Or if we do, I don't want to be stuck with things. I don't want to put on new positions that are meant to be a swing trade because the volatility can be too big, and I'll probably get shaken out of them even with reasonable stops. So my preferred time frame is that of a swing trader. And I've got Roblox right now that's been going for a month now. It's just crazy how strong the trend has been in there.
Yeah.
Most of the time, though, my trades are, a couple days to maybe a couple weeks on, a straggler piece. So
I got it.
my main time frames. Let me answer your question, I guess. Is that so for entering a trade, I'm first thing in the morning, I'm always looking at a 1-minute chart on the stocks that I'm looking at, and I use my what I call chase the gap or wait for VWAP, which is you've read about that. So if the market opens here, closed here, opens here, runs up, pulls back a little bit, and then the VWAP will look like this. So I don't want to chase that gap because it might continue lower, or if it does this, as it gets back above the daily VWAP, then I want to be a buyer here with my stop below the low of the day because it gapped up, it ran a little bit, sellers took control for a little while, but then the buy, they blew their opportunity to, push it back down and close that gap. So this is a stock that I'm looking at on a 15-minute time frame, a 30-minute time frame, and a daily time frame that looks like it should be able to continue to trend higher. So I'll enter on the 1-minute chart, and then I might set my stop there or part of my stop there and have my swing stop below yesterday's closing area on half of it. And then I try to back away quickly from the 1-minute chart. That's just for precise entry. And then I'll look at, the higher lows on a 15-minute time frame and try to trail my stops up under those.
Got it. That's awesome. That makes total sense. Yeah, I'm a simple man. I like to add I have the session VWAP on a 15, 10 or 30 minute chart. And I love to see a market that's kind of trending intraday. And I love what's called I don't know if you called it this or where I learned this from. I might have made it up, but the VWAP touch, right? I'm looking for a
Hmm.
VWAP touch because, you get you get natural retracements all the time, even in a trend market. And when I see that VWAP touch and the VWAP holds and I get the next candle is my confirmation candle,
Yeah.
then I know it's safe to stick my feet into the water.
Yeah, and that's something I wrote about in the book is buy the touch or the bounce.
Right.
And some people want to buy the touch and that's fine. I mean it can work. It still blows my mind how often it'll come down right to the VWAP and bounce. Whereas I'm looking for a higher low above it. So I mean a higher high above it. I might not buy till over here, whereas the touch will buy right here. So, and now do I want to sell short the touch of the anchor from the high? Or do I want to sell short right here as it's breaking down with my intention of, is it going to, is this a trade I actually even want to take? Because I think that it's going to come down back to this anchor. But the more times this anchor from the 930 is tested, the more likely it is going to fail and come down to here next. And now those who are just looking at the SPY are going to say, wow, it's breaking VWAP. It's going to fall apart. It's going to go down to the lows. And then they short it. It comes down to here and it bounces back up. And we just have this frustrating range. And that's why, again, you've got to be aware of both anchors, in particular when we have an overnight range. If it was just a dead overnight range where the SPY traded in an eight handle range, then it's with very low volume, then it's not really going to matter. They're going to be in about the same spot.
Yeah, I got it. That's awesome stuff, man. Well, listen, I appreciate you being here with us today. I really do. It's great to talk to you again.
Thanks for having me again, Jim.
Yeah, my pleasure. Everybody, remember Alpha Trends on X. You could follow, get engaged with Brian. Great stuff. Get the book. It's a great book. And not only that, the VWAP book is. I should shut up, but I'm not gonna. The VWAP book is more than just a VWAP book. It's a trading book. There's a lot of good tips and nuggets in there. Notwithstanding the VWAP. So. I'm gonna recommend it big time. So anyway, hopefully folks get it.
All right. Well, thank you.
All right, folks, everybody, thanks for being with us this morning at NinjaTrader Live. We had a fantastic session this morning with some great contributors. We're not done. Actually, we're going to take a quick break here. We're going to come back a little bit early today. Let me get my time straight here. This is going to be a 1:55. Am I looking at this right? 1:55 start. Me and Shai are going to be talking about a pre-FOMC discussion with charts, the whole works. And then right after that, Tony Nash is going to be with, you guys got to check out Tony Nash. He's awesome. He's going to be with Shai immediately after that. And then we'll go into the regular trade to close with Nick for a Tick and Stowe. So go get lunch. Relax. Thank you for being here, chat community. You guys are awesome as usual. Best chat community that there is. End of story. Thanks for being with us. See you in a few.